Thank you. Coming up for sure. Thank you for that, open Chris. Go into this diagram a little bit. Here. Here. Yeah. Yes, we're definitely up and running. Okay, awesome. All right. So yeah. So again, we kind of seen that inherent fear that they put into a lot of the call buyers. Again, once they was able to recognize that, you know, that opening flush was just no more than the fact that people were taking profit off the methodical bounce off the support yesterday. When we fill that gap, essentially, and the market ran itself into what we know to be that of a, you know, somewhat of a rising wedge, right? Just complete uptrend, strong, you know, move to the upside, and then that followed through with, you know, obviously meeting a point or support, right? Matter of fact, just that same, I'm gonna use that same line there. Stretch that all the way up to that point of resistance there. And that way you can kind of really see it, you know, for what it is, right? So, you know, when you look at this, of course, we're trained to look at these patterns and trends. That's why we try to, you know, grid line and guideline the market in a way where it'll have a lot of, proper angles, so we can kind of trade in around those levels, right? Those marquee patterns that we learned, you know, when we first start out in our career in day trading and just trading period, right? The pennants and the bearish this and the bull flags and this and the rising this and the falling this and this and that. All those things does have merit in markets when you definitely have a lot of other ingredients that give you a really good clear signal on how to be able to assess risk at, you know, as I've been saying a lot, you know, we in the you know, as I like to say, the ninth inning literally of understanding peak to trough, right? The ideal of peak to trough trading, something that I've just been championing a lot. You know, I've just been really going in on it for quite a while, because I think for a lot of people who are especially trading options too, it's good to know channels, right? Because that's how you can set that preconceived ideal of a strike price, right? Where you buy in the money, out the money, at the money, right? Or deep in the money or deep out of the money, right? For whatever value reason. Of course, if you're gonna do anything that's deep out of the money, it definitely better be one that has pretty good premium value and have a length of time on that contract, right? You never buy deep out of the money contracts, right? Unless you have ample time and you really have that aspect of liquidity that you know, or that's going to come into that asset, right? Something like an earnings player to that nature, or you just have a moment where the market unravels because some really, you know, egregious economic data that came out and that spooked the market, and then everything just start kind of unraveling from there, right? But technically, of course, you know, we're doing these things with the understanding that we're trying to read all the proper signals to make the best signal or decision, excuse me, so we can get, you know, profit from that perspective, right? So instantly when we saw that right there, when we discussed it actually yesterday during the live stream I was doing on YouTube, when we said, you know, hey, you know, and even last night, of course, as well, you know, here's our resistance point, right? Clear as day, that was going to be resistance, right? I mean, not brain surgery there. When you think about it from that perspective, you ran right into a block, right? You ran back into order blocks, right? Of course, if, you know, over my keeps on right now, since Camille, they'll kind of give you that rundown. When you're looking at there, that little aerial, you know, chatter here, if you want to call that buyers and sellers at that point there, where you had like a basic wall there, coming off the lows, running up into that area. Well, it had to get, you know, chew through all those guys there in order to kind of push higher, right? And everybody from that point, consequently on the backside of this, we're going to be somewhat, you know, roadblocks or obstacles, right? And at that point, the market was already exhausted because it literally climbed methodically the wall of word throughout the entire day session, right? Once you open up, you had that long wick down, as you see right here in this candle here, right? You had a big wick up, just kind of left the market, you know, in between. Of course, if you want to use that, call it a spinning top or whatever. And then from there, the market just kind of methodically climb all day long, right? So you literally, those who swung puts out of the previous day literally had to sell, right? Within that first, hour worth of trading, right? Get out of there whatever profit you had, and now, play the idea of the bounce at the point, because it was, pretty obvious what they were trying to do with getting the market off the lows here in terms of RSI here. They used that as a pivot launching point to try to get some snap back from just having a steady deluge of market just kind of pulling back, right? That we got over the past 5 days. Now, with all that being said, when you see things like this or these kind of telltale signals here, now that we're starting to see that similarity, we're starting to see some symmetry in terms of market pattern value, whatever. You start trying to preset your trading. You guys, okay? You start trading start trying to set a pre-trading strategy going forward for the next potential session. Why? Because you know that the markets are already kind of giving you basically cheat codes, right? So when we see that resistance point here, literally sitting at that bar to around about 448.50, instantly you tell yourself, okay, well, going into tomorrow, of course, we fell short of really breaking above it today. We sold off from it. Then we had a methodical climb on the back end of the day to kind of really put the market somewhat in a position where, number one, either the market makers are trying to kill all the put buyers that are still holding on, haven't closed their positions out, right? Which obviously makes sense because they don't want to pay out these big payouts that they've been doing lately on the downside. They've been really huge, right? You guys been benefiting from it too. You guys been posting and showing, what you've been able to accomplish. Well, the markets, in terms of the market makers, like we know to be a part of their regimens, they're always trying to delta hedge the market, right? They're trying to make sure to keep the market balanced, where they can kind of methodically move, in essence, to the tunes that they would like the market to do on average basis, meaning up and to the right very methodically, but not with a whole lot of volatility, right? Because volatility causes a lot of people to make a lot of indecisive decisions, emotional decisions, which can spiral out of control very fast for the market, because the market makers can't count for somebody just having a meltdown or having a stop loss set so consecutively where they just kind of trips all those. Next thing you know, if they got major share size, the market just kind of falls or spikes up into those moments, right? So they're delta hedging every single chance they get to stop, any kind of abnormal volatility that the markets do not want to account for, to keep people from being able to kind of jump in and day trade it quickly and make money off that volatility. If that makes sense, a lot of ways you're trying to see the market moving. You say, well, man, what's that about? Why is the market just, why did it just pull back like that, right? Or why did this kind of go up like that? Well, those things are, again, being reckoned to that of, there's a lot of fear still in or around marketplace. I call it, when you talk about when the market's coming down here, definitely. But even when it's going up, it's somewhat the same aspect, for the short sellers, right? They're capitulating a little bit, right? And they're saying, man, I've been in a position for a minute. I might need to start covering my short here and get on out of here because they're getting ready to squeeze it, right? Which we've basically been saying for the past year and a half. It's basically what's been happening. The short sellers just been getting crushed, right? If they haven't been very meticulous in terms of how they pick their position, right? There's no buying and just lingering in the position unless it's a dirtbag stock that that's garbage and you can just kind of ride it because it's a weakling, right? But dealing with the S&P 500 or the NASDAQ, at some point, even the IWM and the Russell, whatever, QQQs, the XLK, any of those type of scenarios like that were just surefire growth stock defensive plays. Well, those stocks all presented, again, just a methodical melt to the upside, and just everybody made money in those stocks hand over fist. Right? It became so apparent at some point you could just buy leaps out 3, 4, 6 months out. This was in the thick of COVID. And I mean, those contracts were paying heavily within this, literally first month, right? Second month for some, it just the money was turned over very, very quickly and rapidly, right? So when you look at the markets, again, like we've been discussing as far as being able to channel it or put it in some kind of form of a bracket, right? Well, that's basically what you see right here, right? You see now what we had yesterday with the melt up, from this perspective right here. Of course, I'm gonna change the color here a little bit. From this perspective right here, and you say to yourself, we had to pull back today. We presented basically, if you look at it from that perspective, we just made a what? Right? We made a higher low off that gap fill. Wasn't a whole lot. It was no more than about 50 cents, right? But it was enough, or about 70 cents. We made a high and low. From that point, they stopped the market on the down right there. Then they just marched the market up to the upside, right? To somewhat, keep those who are still somewhat optimistic about the markets, engaged, right? Now, we still here for you call buyers. Don't just run for the hills too soon, right? Because we all know if it have broke that 440 and really dripped down, it could have got real ugly. Right, today could have got very ugly. Let's make no mistake about it. That first bullish engulfing candle, or bearish, engulfing candle, this guy right here, that right there put a lot of fear in a lot of the bulls mindset, because they really thought it was going to, break above the, that 448.50 resistance up here, right? And then from there just march higher, right? But that did not happen. That definitely did not happen. And we planned for this stuff, right? We talked about it. It was like, okay, here's our resistance point. We already know what's going on. So if you're going to trade this position going forward into tomorrow in any form, right, or just using this as a catalyst for the broader market, in some cases, if there's a correlation with the S&P 500, well, these are the things you want to watch for, right? Because now you're dealing with a clear ceiling coming off of what? A clear floor, right? A peak to trough diagram here that gives you a very good, again, vantage point of what you should be calculating in terms of your risk versus reward, right? You guys with me there? Is it making sense a little bit? When you're assessing risk,
Yep.
right, you're always looking at what? Top side and bottom side perspective, right? What how much money I got wiggle room at this point after such a move like this to the upside to get more to the upside, right? And you at the what? You right up against some resistance, right? That way, already when you see something like that, when the market's already been weak coming off a downtrend like this, do you tell yourself, is it good that I'm gonna buy me some out of the money calls? Because I think now we're gonna get all that money back and then something and march to the upside. Or do you tell yourself, I think it'd be more, conscious here to play that opening point of tomorrow from point of resistance that, if the market cannot prove itself to me, right? Prove it's worthy of my money, trading this thing to the upside, I want to be more reluctant to try to think that, if we hit resistance there, I'm definitely going to play the put side, right? Because we just came off of what? Again, a deluge of steady downtrending over the past 5 days, which showed a lot of weakness in the markets, right? So now we're more, we're more structured in how we go about saying, where's the greatest opportunity in the markets at this point? If, again, we're using the S&P 500 as a case study tonight, but where are my opportunities at here, right? Are there any sectors that are being spared right now while the markets are coming down, right? You go do your little searches, you're checking all the different spider ETFs, which ones may be working, which ones may not be working, right? You're trying to, again, you literally are seeking alpha, as they say, right? Seeking alpha, right? Trying to find some yield, right? But ultimately, if you just stay what's in, like we like to say, the safe zone, you just say, I'm gonna stick around the SPX or the SPY. Well, clearly it was the most, I should say, the most liquid scenario that you could trade that gave us the best definitive outlook of what was already happening in the broader market, because it's the true, emotional sentiment gauge of all stocks, right? People like to look at the SPY as what's, what the old broader market may be looking like, right? So yeah, it was a really kind of a somewhat, and I don't like to use the word easy, but it was an easy read once we was able to map that resistance out when we kind of figured out what was the channel going into today. It could not break above it. So instantly you tell yourself, I'm buying me some puts right out the gate, right? I'm gonna buy me some puts because as soon as we spaz up there, right? We pull back, spaz, went to try to break out to that resistance, and we failed miserably, right? And then after that, the market just came crashing down, right? It just came, well, crashing is a big word, but it definitely pulled back with some strength to let us know that, the markets are not so confident quite to be buying a dip and just sitting in it, right? And so that's basically what you get there in that perspective when you look at the market, going forward, and you tell yourself, okay, well, we got one more day for the weekly contracts to expire, and at this point, right? At this point, is there any meat left on the bone, right? Because that's what a lot of people are gonna be searching tomorrow to figure out: is there anything left on the bone that already haven't been kind of ate, from all that level of trading that came out of the previous 5 days, right? We filled the gap. We did do that. That 443, 443, 40, 50 areas. We filled that gap, right? And now we're kind of, I forgot where it was zoomed. So every time I draw something, it's going to be all over the place. Here. We filled the gap there, of course, like I say, right here, over here at the 443 area here, right at that pivot point, about 443, 38, 40, whatever. And now we're kind of, building out what we consider to be some kind of form of them trying to establish a new floor. Right? Can y'all see that there? Can y'all see everything clearly here too?
Yeah.
Kind of getting that floor now. You got the 443 gap fill support, which is now pseudo support. I like to call it pseudo support, right? Because that's what we're at now, right? Until it can become a very, base support, based upon them keeping the market, above that point, and now starting to attract buyers to come in now and fill in some of those potholes, right, if you will. And so today's snapback was somewhat what they tried to present to the market yesterday. Now, again, it killed a lot of theta. It was what the theta burn was on today, like you typically do. They try to, slow the bleeding down and kill those contracts who were people who were still sitting there who had not closed out some of their puts, right? And so they kind of gave you that retracement back to a point where they got close to that point of resistance there, around about 448. What was it, like 448.35, right? Didn't even go basically up to the top point where market hit yesterday at 448.41. And then from there, in comes the pullback. Right. So I was sitting there watching. I said, okay, they're gonna try to push this thing back up there, see if they could retest it. Right. I said, we get up there and we definitely don't shoot through it, I'm finna buy me some back end of the day puts. Like, keep in mind, I already did a lot of my damage early in the day. I was posting that to you guys, literally before 10, I was already up maybe like $1,500. So I was like, okay, there's no need for me to fight the market. I get the chance to kick back, cut on YouTube. I'm catching up on some YouTube videos and doing some work stuff that I need, take care of. Because I wasn't gonna fight the market at that point. Now, needless to say, I was able to catch. I thought about two calls when we start bouncing, kind of going up methodical like that. But I bought them late though, to my own, bad timing. I waited till we crossed over 200 moving average and I bought them there. So I only really got, that much of a 445 move up to like 447.20, right? And that's okay. I'm not gonna go, deal with this any longer. At the point, so at any point, I feel like if they're gonna pull the rug on the market, I want to take this little bit of profit I do got, which wasn't a whole lot, but it was nice little additive to what I already had made and run. But when I saw that wicked out and they made that straight up move, like when you see the market make that straight up parallel, parabolic move like that, instantly you see stuff like that, that means that's what? That's them with their last gasp for fresh air. Y'all with me there?
Yep.
Yeah, I'm pretty sure y'all saw it too. The SP just stood straight up and then went, it had that last little clawing to get out the, get from above the ground a little bit. And then from there, I said, oh, that's a short position there. Right. So instantly, right at that point, I turned around and shorted, the SP 500 there with two contracts, to kind of play that downside weakness on the way back down. Now, of course, these are the ones that I actually swung. I swung these two, right? I swung those two and I ended up buying, I think, two contracts of the AMC, because AMC made a big powerful move today as well, right? It did a peak to trough, trough to peak bump move, run or move, whatever you want to say. And it got to a point where it just got completely extended, and you just know at that point, the buyers were exhausted, right? The Wall Street bets crew, they ran out of money, ran out of, I don't know what, they didn't bring that oomph that I thought it was going to do to kind of get it back over that 448, now push it, up toward that $50 point, right? But nonetheless, those were the two contracts I swung going into tomorrow, just kind of put that out there from a transparent perspective. So we'll see how those two work out. As of now, they're working, right? As of now, they're working. Right. And that was just based purely on watching this chart, watching the rising wedge patterns. I mean, we can draw these rising wedge patterns here very definitively in a way where we're not confused. When we see it, we already know what we're looking at. Right. Does it make sense? You see what I'm saying? So if you see that there, right? Here's your block straight down, right? Clearly, you see what's going on there. So even if you use that straight line there at that pivot point around 448, you clearly see what's going on there, right? If y'all seen that pattern like that, what kind of pattern is that? Would that be to you guys?
Bearish.
Say bear, and why would you say bearish over Jeremy?
Because when it's rising up like that on that wedge and it's hitting that corner right there, it would have to come down or it would have to break through. But I think 9 out of 10 times it falls.
Right.
Right?
So sticking to the principles of what a rising wedge pattern is, right?
Yeah.
So when we think about rising wedge, we think about what? Exhaustion, right? At some point, you run into some aspect of exhaustion when you just melt it up, melt it up, melt it up, melt it up. Now, for you to take it to that next level to break out of that resistance that you just kind of clawed and work your way up into that point, you're gonna need what? Real buyers to step in and what? And help out, right?
But yeah, they gotta push it up there.
You're gonna push it through there, right? It's like a relay race, right? You need that last leg to come through, right? So apparently they didn't have Usain Bolt on that last with that 4x4, right? They fell short, right? They might have had, I don't know, somebody that wasn't
This
about
would
that high.
be the fourth time they tried it. If they can get it pushed through tomorrow.
Right. Well, see,
But
we're gonna go into that a little bit too. But as of what we saw right here going into the close, which they had enough time to do it, keep in mind, these are hourly candles. This candle right here, which is the one that they did the kind of blow talk with this guy right here with the long wick, right?
mm-hmm.
I mean, well, if these are hourly candles, that means that was right around what? Power hour time frame, right?
Yeah.
So you mean tell me power hour is the tip of the hour where most people get excited about what? Swing trade the market to the next day, especially if they feel like they had some comeback. For people who've been beat up or downtrend or downtrodden because their trend is working against them. In this case, it's going to be who? Right? It was the bulls, right? Because they are trying to find favor back in the dip by conscious, decision making process, right? So they did have the feds along, on their side a little bit today, and hedge funds. Some people came in and tried to buy it because again, that's controlled buying there. Right? You see candles like that, that's controlled buying, right? Kind of basically what we saw again yesterday, right? They just tried to kind of keep the market from kind of going any further or plummeting any lower, right? So now we already know, like we discussed yesterday, we mapped this out. We already know what the resistance looks like going into what? Tomorrow, right? What is the resistance tomorrow? What price would the resistance be tomorrow?
448, 30, 37, somewhere around there.
448, right? 448, 48.37, right? And how do we assume that that's a point of resistance that we need to kind of keep our eye on?
Because that's the top, that wick, the
last
album. Yeah.
Right, that last blow top hour, right? So we got 448.35 by the OHLC model, right? So 448.37, 448.35.
Somebody got their mic open.
Okay.
Mo?
It's
That's not.
clearly. Go ahead. Sorry. Go ahead.
That's not.
You guys good?
Yeah, it was Mo.
It,
So supposed to that wasn't me. He coming at me.
I'm quiet as a mouse. I'm doing payroll. I can't. Nobody's here.
It's okay. Y'all know how to get. We're in training now, so it's over. But I do want to make sure y'all can get it. So don't hesitate to ask me to repeat it. I'll repeat myself. Y'all know how to. No problem doing that. Right. So again, like we just noticed here, right at that moment we got that blow top wick, right? That kind of straight line scenario. Mm-hmm. That was our signal, right? That barbecue middle, like you just speak about over Jeremy, that was a moment to push it, right? They ran out of gas, right? They definitely ran out of gas there. And the market, like I said, right when I saw that happen, I saw the level of that wick, the length of that wick. Matter of fact, let me clear this off so you can see a little bit here. Let's go. Some of it. One second. All right. So right there, right? Look at the length of that wick right there, right? And as you see it, it has that blue arrow right there. That's what they call like what is it? That's the channel breakout arrows there. At that point, that was clear that the market at that point had hit a point of what? Exhaustion, right? It had hit its peak euphoria value of climbing off the lows a little bit from what it did from 444. It pretty much got those 4 points, with a little extra on top, and after that, Wall Street, because they like to kind of get out early before retail do, they were fine with that and they moved on. Literally right after that, next hour, going into power again, this is power hour, you had to kind of pull back, right? And then methodically just kind of what drip down slowly but surely to the point where it rests and settles, at the end of the day, right? Showing you that again, if they are going to try to, number one, build a rounded bottom here at that point, to kind of launch it higher going into tomorrow, or that was another precursor of what's to come for us, the market kind of what, just kind of trending back down towards that 200-day moving average, or that 20-day moving average point, which typically sits around about what price, right? We talked about that a little bit yesterday, sitting at around about what, 446. Y'all with me there?
Yeah.
We use that today.
Yeah.
That was our medium point to work off of today, right? We know we played top side and we had bottom side to work with today, right? We had more, top side in terms of profit value. Now the climb off the lows is great too. Don't get it twisted, but that initial flush that happened during rush hour traffic trading of the morning, that was the time to make the money. Why? Because it happened fast, it happened furious, it gave you everything you needed without having to deal with what? Time decay, gamma issues, any Vega, any Delta issues in terms of what your option contract if you're trading option. Make sense? At that point, the market was still pregnant with what? All the call buyers that we had bought what? Yesterday, right? Up until this methodical move, and there was this whole thing we're gonna break out today, and it didn't, right? It buffed off that resistance, came right back down. So instead, if you bought any, in the money puts, let's say from 448, even 447s, within that first hour or 2 hours, you made money. Especially if you wrote it down to a 444 level, right? Easy cover at that point, because clearly you got resistance there. When we say resistance going to the downside, this point is to be short. It's definitely resistance going to the downside, but support for those bulls who were sitting there trying to play off that came from yesterday, that saw that was a point where they was going to draw their line in the sand and try to play off of it. And they did. Of course, they got Wall Street help behind them all the time. But it was clear that was the moment to get you a nice little bag. Right? So instantly, I was like, okay, I'm done. Right? Like I said, I'm pulling back. I'm not going to be, I don't want to give nothing back, right? That I don't have to. Push away from the computer, right? If I tell myself, push away, brother, after boy, push away, right? And I did, right? And then I only got excited when I saw it climbing near that 200 moving average. That's when I took me a couple scalp calls at that point. They ended up paying, not a whole lot, but they got me, over a couple, well, only a couple hundred, but it was like about 130, somewhere around there, about two, whatever. But that's a little extra added to what I already had. So I was like, okay, I'm grateful, right? But no big deal. So again, going into tomorrow, right? If I was to ask you guys for, this is the part where we get you guys fired up a little bit. I want to interact with you guys, right? We're family over here. So, I go, if you're looking at this here, what do you see as far as tomorrow, as far as probability of what you think the market's going to do? Now, again, we got up clearly there. We see a pattern that's rising off the bottom here, and it kind of hit point of exhaustion. That's why you kind of had that pullback at that point. Now, that could mean one or two things like I discussed. It could be that they're pulling it back to kind of calm down the RSI so they can start building a potential rounded bottom potential. Or that was just a resistance point coming off yesterday. They couldn't push through it there. And it might be a signal for more downtrend to push the market back down towards at least a 200-day moving average to kind of build a new support of a succession of higher lows to establish a new support going forward, right? So those are the probable aspects in terms of how you would trade that, right? To give yourself an idea of, where you can try to find you a couple little bucks at going into a Friday expiration. And tomorrow is also what kind of marketplace do we have tomorrow to deal with as far as an event?
It's the triple witching tomorrow.
I thought quadruple witching was next week.
It's this week, I believe.
No, it's tomorrow.
It's tomorrow, if I'm not mistaken.
The third Friday of September. Mm-hmm. Yeah, that's tomorrow.
Yep.
So there's going to be a lot of volatility in the market tomorrow.
A lot of volatility. And typically when we have triple witching or quadruple witching, when did that volatility actually kick in? In the front half of the day or the back end of the day? Anybody?
I would think the back end.
Right, so back end of the day, right?
Yeah.
And you're right. That's typically when it happens. It happens near the back end. It's kind of like when imbalances come out. Now, imbalances always come out inside of the power hour time frame, right? By the last 20 to 15 minutes of the market, you have what they call imbalances kick in. And then market, you see some stock that's going, that might have been sucking throughout the day. And all of a sudden, just pick up and just kind of gap up like $2-3. Like, what has happened? What just happened? And before you know it, before the bell ring, is right back down, right? That's the imbalance, right? When contracts and stuff are moving around, and fund managers are moving money around, taking position off, or putting money, into the market, moving the markets. It's the same thing what happened with quadruple witching or triple witching, right? Triple witching is just what a value of what's happening. A lot of what futures contract and regular equity contracts are all expire around the same time frame, right? And so whatever that you can get, well, a lot of these are basically what big hedge funds or banks like that own these contracts too. So these are bigger positions, right? These ain't a little small thing. So this is, this is a lot of money, right? Right. So that could be a big market moving perspective where you can see where they was hiding that at in certain stocks or ones that they was waiting to buy. Right. That's what triple witching actually details. It gives you a signal what they was thinking about already. Right. So it's interesting. So it's inside. So 1 second, guys. Let me get this quick. 1 second.
So who got their money on the market tanking tomorrow?
I bought calls and put my calls don't expire till next week though, so I'm good either way it go.
There you go. Hedging your bet.
I don't know if that's gonna fall. I don't know if that's gonna fall though. Because they had two repos they put in for today and just for tomorrow and today. So they going to inject. It's going to inject sometime. It may be on the back end, but yeah, I ain't worried. I'm not worried about it. If it hit 446, I'm good with it doing that. I'm not really worried about that.
As far as like you talking about like when it comes to your options.
Yeah, to my options because I got them well into next week. So, I just don't want it to slip. If it slipped down to 443, then I would be a little worried. If it slipped down past that, yeah, I'll be worried about that. But if it slipped down, a point, maybe a point and a half, 446 somewhere, I'm good with that. As long as it stay, within that range. Theta, the Theta and Delta won't hurt that much. And, I should be good.
This is one you got for. This is one this is for next week.
Huh?
No, I was saying, is this one that you got for this week, or you got one for next week, or are they both?
I got one. I got one for next week. Got a call for next week. Now, if it open lower, then I kind of okay. Well, I can go ahead and throw me a put in there too. I don't know if it's gonna open lower or not. I don't know. From what we're seeing, it's a chance to do that, but
yeah, it would. Past 5 days, just look at that. It just and like this is the Feds. They got the power and opportunity to reverse this completely if they wanted to.
That's what I was telling
like,
people.
Look at that
though.
trend. That trend.
Yeah, the people on Webull, they be acting crazy with it. They be like, well, this is what I see on the daily. It's gonna tank tomorrow. I bought puts, and I'm like, that's not smart. If it's gonna expire tomorrow, because you could get crushed. You know what I'm saying?
You need time for that thing to breathe.
Yeah, it's Fridays is iffy, man. It's iffy. Whether the technicals is right or not. I never just bet that it's gonna automatically do this. Even if the technicals are right, it's kind of like wait and see.
Right. Like I'm starting to get in the habit to buy, probably like 2 days or like 5 days out.
Yeah.
On an auction strike price just for like tomorrow or something like that, because what are the chances that it hit that day not likely, but let's say 2 or 3 days from now, what are the chances? More likely, depending on what the catalyst is, what his sentiment is, or that, yep, for that particular stock.
Right.
Now keep in mind, y'all know that we discussed this. When you deploy any strategy on a Friday for option contract,
Mm-hmm.
this is me kind of quizzing y'all, but y'all already know this. So it ain't like y'all don't know, but I gotta say it because a lot of people on here again at different levels of their learning, and this is just a part of our repetition aspect of giving people quality information that's based upon the historical context what the markets typically do. If you're gonna buy any contract going into it expire, and we got quadruple, like we said, whatever, but we still playing for the first couple hours of the market period because that's rush hour.
Right.
You have a market sitting at where it's sitting at now, right? Where it kind of ran back up towards certain points of resistance, and it's kind of showing a little weakness here. It's gonna have to barbecue a meal do at this point, right? Depends on people who may feel like, it's Friday. I don't want to fight the market. It's gonna kind of play this old slow dripping game. Then I'm getting out of here, right? And that may cause kind of the imbalance early in the morning. So if you're gonna buy a contract either the day of or you already bought it, swinging it into tomorrow, we talked about this. Are you more preferred after you've seen this kind of price action that we've got for the past 4 or 5 days? Are you more inclined to buy in the money, at the money, or out the money? And that's to try to take any kind of risk value on in the markets and trading that perspective.
I would be in the money going into a Friday.
But now, why would you do that over, Chris? If you don't mind, I mean to cut you, but why would you be in the money going into a Friday?
I mean, because it's a Friday. It's the end of the week. And then you gotta take implied volatility. You gotta take theta. You gotta take delta. All of that into account. That your window is small unless you bought contracts, well into next week or the week after. But buying like that 1 day or a couple day contract is, that's you really got to be in the money. Especially if you're looking at the chart and it's, like you said, it's showing weakness according to the chart. You know what I'm saying? The only thing you should be doing, based on the chart, I would be buying puts, because it's expiration day. 9/17 is expiration day.
Now let me ask you this: would you more if you're gonna buy those puts? You're paying for the what? What would be your time frame to kind of sit and languish through the market to see if you can reap the benefits of that intraday put buy for in the money put perspective? What would be your time frame? An hour, 2 hours, 3 hours? What would you be really trying to map out in your head that you're willing to sit through?
That I guess that 9:30 to 11, where all the traffic is, all the volume is. That's what I would be looking at. If it ain't nothing moving by then, it might be time to go ahead and get out, because that's when all the volume is there. It's when everybody is partying. So if it ain't going down enough by then it might be time to go ahead and cut your losses.
Good assessment. Now, do you guys understand what he was saying? Do you guys agree with that? Anybody have any questions to that?
Yeah, he left out that sellout process. Like when you buy into the expiration date, like tomorrow, you have to play it in the morning, because towards the end of the day, these platforms have a process where they'll sell your contract for you.
Well, not even that. It's just, that delta just gets so weak, and then that theta just burn your contract. It'll be worth nothing, if you don't play it early. That's why it's gotta be quick. If it ain't quick, then you're gonna be stuck holding the bag. You have to get out.
So my question is, why not put that pressure on yourself to try to buy on that Friday, knowing it's going to expire? Why put that pressure? Just push your expiration maybe out to another week or so.
I mean that could be
risky.
Good question.
It's like
that's real risky. Why take that unnecessary risk if that's the situation?
I mean, it depends on the trader, though. I mean, he can have a good news, he can have great analysis behind it. It could be a plethora of things. I mean, for instance, Jay Powell was doing all this repo operation stuff. Well, everybody know if he was doing all this repo operation, and let's say the market was sitting at, probably 2 points down or whatever. Well, if you knew that he was gonna do this repo operation, yeah, throw some money into it. Let's see what it does. And
But
like
that's
Chris said,
a
like,
time
yeah, you
frame.
got that
Yeah,
3-hour window,
right.
right? You got
And
that 3-hour window for something to do something.
I would even cut it shorter, to be honest. I would cut it shorter. I would say that first hour, if nothing popping off, you might want to start looking to sell, because like I said, that delta is so small with that window. It's small. You don't have a lot of time with that, because they're just gonna get weaker and weaker, and then just take more money and more money the more time it goes. So that's why the end of the week contracts, what I'm saying, is you gotta make sure you on point with it. You can't be, your risk is small with that.
That's why
No.
I was saying why pressure yourself that much if you know your risk is very thin, your risk is thin and everything is real on the edge. But I understand some guys like to take that risk and play that, and like you said, if you got pinpoint accuracy in your, I guess.
Yeah. I mean, the
thesis.
reward can be good if you write. If you write, the reward can be good.
Right. See, you're gambling, sound like
Well, that's what we discussed. That's why I love that, because our whole process in trying to put together a mental thesis to be able to deal with that, right, is understanding what's the risk versus reward ratio, right? What's the profile here, right?
Right.
So if you say, okay, I got my guidelines here, the stock is sitting, either at the lower end or at the upper end, you already kind of have a back door, right? Either you look at it, you got a back door, or you're gonna have a front door. Make sense?
Mm-hmm.
If you come off the top, you got your back door, right? You already know what your stop loss can be sitting at, because you already at that point of resistance. Make sense?
Mm-hmm.
If you got the floor, playing off the floor, or at the trough to pay back to the upside, because the market's kind of gave you that kind of good setup going into the next day. Well, you got that front door, right? You already know the front door is right there, right? And same with your back door behind underneath you, because those are as we know to be a critical point of support at this point, be it pseudo support, but it's there. Make sense? So when you assess that, you're trying to say, well, what's my greatest, what's my greatest profit profile I can get out of this trade if I choose to put this trade on? Now, most chances, because y'all know I am, I like to be very strategic in my placement. If I'm not going to do it intraday, if I don't have like a day trade, but if I have day trades, obviously in the account, where I can just blow that. If it's not in the account, we don't have to worry about all that. Then you say, so if I got a day trade, then okay, based upon what I saw the market did intraday yesterday, and it hit a point of resistance, I already kind of see my resistance point. If I'm going to take that risk on for that moment, then I feel more confident here as opposed to trying to play it out the middle. If I'm going to buy it for intraday, because I have a greater risk of trying to at least get some follow through from what we got out of today back down towards at least a point of bounce support around that 200-day moving average, or if it was the inverse down at the bottom playing towards 200-day moving average, right? Now, typically, like you guys will assess, that's why I like these moments like this, because you're really seeing what we've been kind of discussing about, realizing when the rush hour hours of the market are very fruitful to get paid, especially even if you're the option trader, right? Look at this really quick. First hour of the market, right? I got to show y'all this. Y'all seen it too, but I love little meticulous stuff like this, right? Because it really shows you exactly how the market is really, it really isn't that complicated when you break it down. Let me signify by, let's do this light blue color. See this counter right here? Y'all see that I'm drawing on right now?
Mm-hmm.
First hour of the market. This counter right here, the previous day, first hour of the market. Counting the wicks and all, because that was a what? That's them trying to save the market. We fill the gap, right? Clearly, right? This counter right here, first hour of the market. Y'all see that there? Couldn't make this stuff up. Let's go to the next day. See right here? Or the day before that. See right there? Look at that counter right there. First hour of the market. Y'all with me there? You see that over Al? You guys see that over Brandon, Jeremy, Sister Monica, everybody? Brother Deontay?
Yeah.
Y'all with me, Brother Caesar? Y'all with me here? Sister Angie, all you guys with me? Dwayne, Brother Dwayne?
Yeah.
Yes, sir. Yes, sir.
Look at this counter that preceded that one. Look at the first hour of the market. Y'all see that right there?
Oh, okay.
You see y'all see what's going on here?
Yeah, I see.
All right, same way over here. First hour of the market.
Gotcha.
Right? So you're starting to see what we've been talking about for the longer, right? We're trying to assess what? Pattern, right? trend recognition, right? What's the sentiment of the market? Those candles alone right now pretty much give you all the sentiment you need to know about how people have been trading markets when the market was actually in a what? In a downtrend.
Yeah.
They was using that first hour to figure out if they're gonna barbecue a meal, or if not, what? I'm out, right? And that will be more people who on the what? On the call side who's trying to play for any kind of significant bounce, right? Make sense? However, that trend is already set in motion from the previous day. If you're gonna try to counter trend trade the market, you already know you up against what? An ant trying to go uphill with a boulder coming downhill, right? You up against insurmountable odds in a lot of ways. You're gonna have to really need the market to get behind you to give you that push that you want. If not, it's not even, you shouldn't even fathom the idea of trying to counter trend trade the market at that point, right? Just stay within the trend confinements until it gives you a signal where you can play off of it, right? Now we didn't even get that kind of level of a trend change until we kind of closed the gap down here. So that was the only moment to trade that. And then today, it did open up at the resistance point here, and it did it flushed down. It tried to make a move, try to act like it wanted to take it out, but I saw that as foods go. When I saw that, I said, they don't want it. I saw it. I know y'all saw it like I did. I said, they don't want it. They ain't about that life.
Yeah, I scraped a couple dollars off of it. Yeah.
Instantly, because I looked at just what we just talked about here. I said the first hours of the market been very revealing over the pattern of the past 5 days. Come and sell it, and sure enough, they sold it all the way down to 444.
Got him.
Got it, and that's exactly what I said. I was like, "Oh, I'm done." I said, "Don't do it, African boy. Don't you do it, right? Don't you put that evil on me, Ricky Bobby? Don't you put that evil on me? Don't get me to trade anymore. Don't walk away, brother. Walk away."
Over AE, let the people know this is only for the spot. I mean, you can't do this with an ETF or nothing like that.
Right,
that's not volatile at all.
Very liquid environment that gives you that kind of level of opportunity. Clearly, you're right. You definitely good point, over Brandon, because a lot of people will think that, I can do that with every stock. Well, you still got to be responsible to your you've been able to chart and see what's going on in the asset, right? How it typically trade. But we're talking about big ticket items like this that has a lot of dark pool print in it, because y'all know dark pool counts for at least, in my opinion, at least a third of the S&P volume every day, at least 1/3. And that's what a lot of people don't see, right? They don't have dark pool scanners. They wonder why the level 2 is flipping and the stock, may be thin actually on the bid in the ass, but the stock just spazzed up like 97 cents. That's a lot in the S&P 500. That is a lot.
Right.
And that might have been in the 5-minute candle. Like, I don't see no volume, man. What's going on? This is manipulation. This ain't cheating. No, they got this thing called dark pool. And that's how they get over. So you kind of see those things and you say to yourself, oh, one second, I got a thing. Somebody hit me up for the link. Y'all kind of keep filling in that what I was just talking about right there. Let me get this link to somebody else. They just fill in the gap right there real quick. One second.
What far as dark pool?
Well, yeah, just anything dealing with that, right? Dark pool, just how the markets, kind of reflect that, where we talking about abnormal volume comes in, but we're still talking about people who are trading rush hour traffic with the market, right? When they see that initial, either breakout or breakdown, they instantly start saying, okay, I know what's going to happen here, right? They're going to play into it and then try to get out of there. But give me 1 second, I'll be right back. I'm sorry.
No, we got you. But no, I mean, like anybody who's trading or starting to trade or thinking about trading, first advice I would give you, like I always say, watch the markets. I mean, S&P is the perfect, ETF to watch because it encompasses basically all the tech stocks all together, and it basically holds up the whole market. But when you watch that first, 3 hours, you can really see a lot of manipulation. You can tell what the stock is doing. You can tell emotionally. You can tell what are they doing on a technical side. You can even see fundamentals within that first 3 hours. Like Oba said with the candles, big candle down, going up a little bit, another big candle down. I mean, it happened 5 days in a row, and then all of a sudden they want to jump it up. That's manipulation all day. That's
a trend.
Right, that's a trend. That's hedge funds. That's people. Oh yeah, it's gonna go to the moon. Psych, and then they drop that 6 red candle down. Got them. Got some more money in the bank.
And what you were saying about SPY is the only one that can do that. Well, it's something called the average true range, and that lets how many points basically that stock moves within a day. Whether it's up or down. So I think the SPY is like has an average true range of like 4. You can find that on FinViz, but that just means it's volatile. It can go up 3 to 4 points in a day or more, and that gives you the volatility that you need as a trader to make some money. So you got other stocks that don't move like that. Other ETFs that don't move with that average true range. They move very small and slow. SPY is definitely manipulated. Those 5 or 6 red candles like that throughout this week is just that's a trend. It's clear as day what they doing, and you have to be able to see that and then get in on it, because if you don't see it, that's potential of losing money, and you don't want to be on the opposite side of that. That sucks. It sucks to be on the opposite side of a trade like that. That's clear. That's not our money. That is hedge funds, institutions. They are the only people that can do that. Okay, okay,
Facts.
you can go ahead.
All right. So again, just looking at that too, and again, you're 100% right, because you have to be able to ID those prints, right? In that moment to determine, of course, if you scalping for pennies or you're using the options market to kind of get more bang for your buck. Well, there are certain moments when the market is kind of more susceptible to get those fast moves, those expansion pops or deflation trade scenario. Then yeah, you're just trying to raid a ride or in a lot of ways raid those people who are counter trend trading that potential move that's getting ready to come, because you're starting to see it build up, or if you're privy to have like a dark pool scanner, you'll be able to see it before it happens, right? Just case in point, went over here real quick, the black box, they have it built into their platform. Clearly here, we got dark pool prints happening late into like 5:10 this evening. Now look at what happened ever since everything that from 4 o'clock on. Look at all these dark pool prints, dark blocks, dark average price values, right? Unusual, very large block that came in at 454. See, that's people trying to front run the market for potential tomorrow if they feel like the market will get a bounce early on. And then some of these are also short positions too, right?
So will those dark pools be the same as like block orders?
In some ways they are, but they're coming in again, cloaked, if you will, kind of like CFDs, right? What are CFDs? Contract for difference, right? Contract for differences do not show up on level 2. They do not, right? Because they're derivative, what they call ghost shares. In a lot of ways, they're legal, but they're illegal in America. But you can trade them, right? But
trade that,
yeah, TradeNet. There's just several other platforms that do it. Sure Trader down in the islands and many other, London, they have them, right? And you're kind of coming in just through somebody's order book, with these implied shares, but you have to, make sure you return those shares back to that broker at the end of the day, right? You have to settle out with that broker at the end of the day for all that you use within that order flow that you're using. And those shares do not show up on level 2. And you're just like, man, why I'm gonna start coming down and getting shorted, but the level 2 don't look like it's really got a lot of people on the bid and ass, and things are coming down. Why? Because it's everybody over there on shorting it, trading it, shorting the brakes off of it, right? Like, how is this even possible? Because these are the hitting hand aspects of the market that we don't atone for. Because we're used to just using the basic rubric and saying, this is what I should be able to, assess this market from, right? And we know that that's not how, there's other moving parts to the market, based on my point. Make sense? So those dark blocks are just, large chunks of money that's coming in, and people are like, well, man, how's this even, how's this legal? It's very legal. Look at it, 223 million, right? 44 million. 111 million, right? This one right here was almost $1 billion, right? 2 million, $894 million for that block that came in at 454.
Big up to black box, man. Big up.
Right? And there's others like that. Flow Algo, they have a black box, black box, a dark pool scan. There's others out there you can subscribe to. Of course, with black box, you get all of it in one, which is great. You don't have to just get, a dark pool scanner. You get actual, alert signal scanner options and equity in the same breath. So it really helps. If you are a high frequency trader who really wants to see every aspect of the market, then you want to have like a tool in your tool belt that you can go to help you out at that moment, right? Nothing wrong with that. That's just another part of you saying, I'm utilizing everything I have at my disposal to give me the best advantageous aspect where I could get what, get what I need from the market, right? So that's why a lot of this stuff, again, it's when you see it and you just don't really realize what's going on. Well, a lot of that is them trying to, number one, either prop the market, keep from falling, or they're just heavily attacking it at this point because now they're trying to keep the market, from trying to make any kind of comeback of this, especially going short. Now, if you watch what happened on the back end of the day in the market, of course, if you see these dark pool blocks here that's coming to the market, and someone probably going out at the strength of that, that's more what buyers than what that than that of what the sellers was, right? Let me show you how they prep and plot the market for the next day, right? If we go to the SP 500 chart here, now let's go here. Let's go to the here. See right here? This is when the bell rung, right? This is 4 o'clock, right? You kind of a slight pull back down there. Matter of fact, blow this a little bit. Let's see. Right about right there, right? You got a close right here. You got a slight pullback right there, and then at that point, what you think started happening at that point?
Dark pool.
Them dark pool blocks start coming in to prop the what? Prop the market, right? To keep it from falling, because at that point, it was obvious that it was going to try to what? Drip and go lower, right?
Mm-hmm.
Clearly see that they were trying they were there to save the market. BlackRock, JP Morgan, TD Rowe, Citibank, Wells, those people who are the ones, a lot of these little, they're buying the market at that point through their dark pool usage value. Certain hedge funds, smaller little, fund houses, they're buying through the dark pool to prop the market at that point. Why? Because they're trying to protect their call contracts going into tomorrow. Right? Or their long position that they just trade with big money, because again, those shares are highly, liquid if you got big money behind it, right? 10 cents, 30 cents, 40 cents, a lot of money if you got, 200 million behind it. Even with a ticket like a $446 price target on a stock like the SP, well, that's a lot of money. Right? So they're playing their game, and a lot of traders on our side, we're just trying to make sure we stay within the confinements of what the trend is IDing to us, so we can be safe as possible, because our money can't compete with theirs, right? So when those things are happening and you're just trying to figure out, I don't know, man, is it even worth it? Well, this is what we're trying to assess, and that's just one part of the schematic. You still got to deal with, again, if there's any economic data coming out, because we know tomorrow is also what kind of day? What is tomorrow again? Was event day?
I thought it was quadruple witching.
Triple witching, right? We got triple witching basically, right? Mm-hmm. So that's going to be a market mover, right? Again, bigger than that, what you get on an imbalance at the end of the day, right? And that's pretty much going to come on the back end of the day. So, but what we're focusing on is what? Like we've been discussing, that first hour in the market.
Mm-hmm.
Because there lies the golden opportunity. What we've been assessing, again, we're not making this up, right? I tell you, we could make this stuff up, right? Not making it up. Clearly, first hour of the market again, right here. Clearly, first hour of the market right here. Clearly, first hour of the market right here. First hour of the market right here, right? At some point, you got to say, okay, I see what's going on here, right? I see what's going on. Way even back over here when the market actually finally broke and dropped, right? Those first hours of the market have been very synonymous with what? Pullback.
Mm-hmm.
I ain't making this up. Y'all see it like I'm seeing it, right? So I don't want y'all like, man, I don't know, bro. I don't know. You can make that up. Look at it. See, it's what you need. Well, see, this is what makes an investor or trader stand out, because you have to get you got to get intimate with these charts. You got, look, I need to probably get Sister Camille on, because she definitely started to take it to the next level. Over Marquise, this definitely they curious when it comes to charting. They love it. They got a lot of charting hours in, right? There's a rolling saying going around Wall Street that says that if you have at least done at least a minimum of 10,000 chart diagrams, you ain't ready yet.
Mm-hmm.
I repeat, if you haven't done at least 10,000 chart diagrams, you ain't ready yet. Now, some of y'all like 10,000 charts. Woo, boy, that's a lot. Is it?
Really not.
It really
Not
isn't.
enough.
It's not enough, right? Take a person like my brother Stockguard, bro. He'd be on about 100 plus, within the first, 3-4 hours of the market day in there. He really, in his grab bag and trying to really, dissect the market. Well, again, that's just being conscious to know what your battlefield looks like, right? When you go into any war scenario, you need to know, who the players, right? Who the shakers and the movers. What's the rules of engagement, as we like to say a lot over here. You need to know these things. Now, a lot of people are like, man, that's a lot of work. Is it? It's not. If I can come to this chart and just look at this and say, okay, I see what's happening here. Downtrend, snap back, pull back, weakness here. They're trying to build around the bottom. This is new, higher low off the pivot here, or the pseudo support. Okay, I see what's going on here. Now, what also stands out about this chart that gives me any idea of how I could trade this if I'm going to trade it tomorrow? Okay, let's see. Let's see how the markets open up. Okay, I see a big red candle that day. Oh, this one here. Oh, I see it here. Okay, so I see what's going on here. So this market is weak, right? So there's still more weakness to the upside, or and more strength to the downside. So people who trying to take it to the upside got to bring it, bring that funk. So if the market been selling off early in the mornings, let me see. I might can get me some puts potentially early in the morning. If the market don't really show out and break out the resistance here, then guess what? I'll take that risk profile for that to push back down towards any kind of key pivot point or moving average as my guideline of what I'm targeting for, and I'll use that as my risk versus reward profile for the day. If none of that stuff unfolds where I need it to, guess what I do? I just step back and don't do nothing.
Mm-hmm.
Right? Best trade is the one not taken, because now you're just saying, okay, this is the safe trade, right? This is what you come in and you be right, brother Al, because guess what? If you ain't comfortable in your skin to assess that risk perspective, the best trade is the one not taken. Make sense? Right? And ain't nothing wrong with it, because now you get a free opportunity to to observe the market and really test your mental thesis whether or not you was going to be right or wrong. Make sense? That's a form of charting. You put in hours. You put in hours. You sit there watching it. The same way if you use paper trade. That's why I tell people I have no qualms about paper. I love paper trade while I'm trading live money too at the same time. I'll put that paper trade on first to kind of pre-warm my, the warm up that thesis. If it seems to be kind of working, okay, then I go to my live account real quick. If I got time to do it, boom. Because I'm assessing risk the entire time and trying to see if I'm right based upon all these different factors and variables and dynamics, static moments, whatever. It gives you, as we like to say, more confidence, right? That's why we use the 4 W's, right? What, why, where, and when, right?
Mm-hmm.
You got to be able to get through that check down list before you can just jump out there. And if you ain't confident at that point, don't take it. Trust me, it's not worth it. You gotta be able to assess risk. That's what this game is all about. This is a game about protecting, right? Of course, we want to be on the offense and get a bag, but it's about protecting, right? And the ideal of doing good protection or good defense, even though you have aggressive player that might be on, you still thinking about the protection side of it. You also can benefit in getting a positive outcome in that perspective. So if we were just to use the same mindset I was talking about earlier, playing the resistance of what we got for a very obvious resistance here, around that 448, 448.35, 448.37 area, whatever. Well, that's your line in the sand. Again, the back, the wall is to your back. You literally right at the wall. Now, of course, it fell back a little bit, within that last hour of the market, the power hour. But literally at that point there with the blow up top there that week there, the back was already to your wall was already to the back. Instantly right there, I'm buying puts. Shake me out at that point, because I already know my stop loss is right there. Shake me out at that point, right? And lo and behold, we got that drip down on the back end where people saw what they took profit, right? Because they might be thinking just like the way that we're assessing this now, they probably thinking just like that. Man, that first hour in the market is a doozy. I don't want to get caught in that with my calls and miss and risk not taking profit now after I make this kind of move off the bottom from 444 to 448. That's 4 points. Does that make sense?
Mm-hmm.
You guys with me there? Does it make sense?
Yeah.
I know I said a whole lot, but I want to make sure you guys with me. Brother over Rich, that makes sense? You guys with me there?
Yes, sir.
Monica, Brother Dwayne, Brother Caesar, all you guys in there. So then, you guys
Yes, sir. Sir.
I'm tracking.
100%.
Now, within that range right there.
Mhm.
Okay. So let's look. What is that? Triple top?
You're using what coming off of
Yeah, the white,
I
them
know y'all can
highs.
write on the screen. Y'all know we're in session now, so get them pencils out right on there if y'all have to. That way, a lot of people can keep up too. So that way we'll have a clear assessment. Okay. So use okay. All right. So we got circle here. We got this. So we got 448.37 here. We got 448.41 here on this candle here, right there. And then actually at that point that's like a double. Now this guy right here is kind of weak. It was close, but it wasn't all the way up there. But you could possibly say maybe if you want to throw that in there. But even more so, well, guess what? That's why we look to the what? To the left, to the left. That always determine the future value, right? Well, clearly we got it here, right?
Yeah.
Right? That guy there came close, but clearly there. So that still counts.
Yeah.
It still counts, right? Keep in mind, this ain't like it's just, that stuff is irrelevant now. No, that counts. That's why we draw a resistance line to figure out where's that point of control. Make sense?
Yeah.
So yeah, you could be easily say that, yeah, we up against somewhat of a triple top scenario in that perspective. If it's kind of, trending at around there. So this guy right here, this one right here, and this right here. Now that's at a hold dollar mark, because y'all know half and hold dollar marks are typically points where people set their positions at. It's just a human nature, right? It's habit, right?
Right.
Clearly, you see it there. And this guy over here. That would be like a what? Like a quad top there, right? If you think about it, right? So the market tried a few times to push above those areas and got what? Hit some resistance or got rejected. Try here, reject. Try here, pushed through a little bit, came back down though, rejected. Try here, pushed up, tried to go through it, got rejected. This guy here tried it, pushed up, came back, got rejected. Today, the last hour in the market, it tried it on that blow off top, got rejected. Matumbo, waving the finger. No, not in my house, right? Clearly that's resistance until the market proves what? Otherwise. And that was with aggressive dark pool buying that was behind it. Dark pool couldn't turn it. Hedge fund banks, whatever, they couldn't turn it, and the feds couldn't even turn it. So if we can put all
what
that.
time frame is this?
We're on the hourly chart right now. This is the hourly chart.
Okay, first.
Everybody went the hourly chart here. So if you see that there, you said to yourself, okay, that gives me a little bit more what? Solace in my put thesis. Because the onus is on the who? The bulls or the bears to prove the market at this point.
Bulls.
You say the bulls? Anybody else got in it? What else y'all say? Is the onus on the bulls or the bears at this point to turn the market? Anybody? Bulls or bears? Say the bulls. Say the bulls. Anybody else? You think it's on the bears over Brandon? All right. We got a one bear, two bulls. Anybody else?
Because it's been going up. For the longest. I mean, and you just said turn the market. I mean,
like keep in mind, we're talking about a short-term profile here, though. This is a short-term profile, right? In terms of intraday action, because now we're just playing what?
Oh no, yeah.
With me there? Does it make sense?
Okay, bears. Yeah.
You're waking up every day saying, I'm just trying to capture what I can get out of the market today and get out of the way, right? So at some point, either we're gonna we're gonna make a move, or we're gonna just go, stay in this channel. There's something gonna happen, but we already know there's a lot of different things come down the pipeline. That's what shaking people out of that comfort zone where they just can't sit. Make sense? Economic data points, things happening in and around, policies just at third. So the market is trying to figure out how much time do we have left to ride Gravy Valley Biscuit Wheels before the party's somewhat on ice. Make sense? Everybody's waiting on who to crash the party. Ted started the party, brought in the drugs, got everybody liquored up, and now they're gonna be the ones who crash the same party that they started. could make this stuff up. That's the nature of markets. They have no respect of person mentality surrounding their whole operation. Make sense? Y'all with me there? Make sense to everybody? So that's what when we say risk assessment, that's what risk assessment is all about. You have to know your comfort level, right? What you are capable of being able to assess in order to make good decisions. You just can't say, I like it because of this, or it feels good, right? You know, feeling good ain't gonna never, no, that don't work in the market. Now, it can help a little bit in terms of your intuition because you're like, this might be the moment, but everything else still has to have some, some merit, right? In order for that to work. When that, happens, guess what you do? Capitalize, or, lack thereof in the case where you don't feel confident, you just say, pull back. I'm just gonna be doing what's called watch mode. Make sense? I think we got a little feedback. Somebody got a little feedback. Somebody might go and I think over my key. So yeah, so that's how you assess that, right? That's what we're trying to do every day. We're trying to assess that risk. So when I say, of course, this is why I bought a couple puts on the back end of the day after I had did my little damage earlier in the day, and I got out. I said, I'm done. And I tried it. I got a little, I got a little grown. The old folks in the South, they tell you getting grown, ain't you? I said, yeah, I got a little grown. I tried to get me a couple little scalp calls above, up into that 200 moving average and a little bit above it, right? And then I said, okay, I'm done. And then I saw that kind of weak blow off top at the back end of the day, and they couldn't break that resistance. Oh, I gotta swing me some puts. Right? Because I already know my back door is what? 448 what? 37, 448.41. Make sense?
Mm-hmm.
I'm not gonna lose a whole lot unless only way I lose a lot in that contract is what happens. Some news come out tonight or the pre-market that send that the SP through the roof, right? If not, I'm protected up to 930 because they can only do so much damage, right? Because the market overall, the trend is still what?
Bearish.
It's still bearish. That's the sentiment as of now. Okay. We've been seeing the failed breakout. Look at it. That's a failed breakout there. All that was at most was a dead cat bounce. At most, it was a dead cat bounce. The first hour of the market, doof, out of there. Second, even led into the second hour, doof. This little slow climb back on the back end of the day here, that was just them trying to kill options. That obviously, we know they got a delta hedge. That's what they do. And again, clear enough, they come push it, go break out. People start selling off in the back end of the day. Preferably, people got big money. Like that was good enough. I just day traded it. Okay. Suckered in some retail traders. They stuck. Now they better hope the market is great for them. The market, because if not, they're gonna be in trouble. See how that worked?
Mm-hmm.
So really quick, let's go. Let's see. We normally do this at the end of the session. Let's run over to the future market real quick. Let's see as of now if my puts are still gonna be great. Right now, make puts great again. Right? Come on, Trump. Right? Right? Look at that. As of now, because we know futures are just a small extension of what the market can and can't do, because they can either change or turn or flip. Right now, what my puts look like? Do they look like they're good or they bad?
They good.
Right? And it's still early, so it's not even 8 o'clock yet. But as of now, you're starting to have the market kind of pull back a little bit here with a little bit of energy.
That's what I hate, man. When playing earnings, and the company it'll shoot up or shoot down. You got calls or puts, and you be like, man, I just needed to hold to 9:30. Yeah. After hours, some stuff can happen, and
analyst upgrade, downgrade.
Yeah.
It get ugly out there.
Be praying, boy, praying for 9:30.
I've been in them trades like that.
But you can always play into that.
Say again, over.
I'm sorry. Go ahead, over.
Know what you saying?
No, I'm just saying you can always play into that because if you know, I'm saying you can always play into that because if you know earnings is next week for a particular company and the stock is at a certain price where let's say it's at $7 and earnings is good, or you got an assumption that the earnings is going to be good, we'll get you an option price at 70.50 and let it play out until the actual earnings day. Now the earnings day might be into next month or whatever, but as of right then and there, let's say it shoots up to like $15 or whatever, and you get at 7. Well, you can anticipate that pullback when earnings come out and still capitalize off of
front loading,
that
right?
little bit. Right.
Front loading, yeah.
Front loading.
That's something we discuss on here a lot, right? That's a part of our
they exercise our legs and arms.
taking over Rich. Oh, you might be saying, yeah. So that's the part of the strategy that we all, we talk about a lot. Front running, right, or front loading. That's a very viable option, right? So again, all those things come into mind when you start thinking about, again, we're assessing risk. We're trying to figure out, what's our best plan of action, right? Based upon all the different variables that are out there, and do you feel comfortable not to take that position based upon the criteria of what you have in front of you? Again, we had no issues with the position that we took this entire week and coming out of last week. Why? Because everything was just easily diagrammed. And I'm not gonna say it was just that easy, but it was easy enough to detail that we had a lot of different what they call things aligning up, where it was just more also, somewhat just very. I keep trying to stay away from the word easy because I don't want to mislead you, but a lot of it sometimes becomes very applicable to our strategy when everything aligns itself, like stars line themselves. Everything just lined up. We had the fear that was already overhanging the market in terms of Fed tapering and CPI data, PMI data, and all this stuff like that. We had the idea that the market's already hit all-time high and kind of stalled out there. So the resistance point was already pretty much a line in the sand. It was evident it was going to happen, right? Of course, we had, what else we had? Again, the other stuff that the Delta and all this stuff like that, the inflation conversation, it was just a good recipe for success for the market to kind of stall out. We already had hit a point where the market was showing, again, massive exhaustion, but we mapped it out, right? We did we did the whole rising wedge pattern breakdown, right? See right there? Clear as day. Clear as day there. You see it there. They either had to break out or at that point it was going to break down. Now you say to yourself, well, how do you determine the length of the breakdown? Y'all know we've done this plenty of times, right? Well, how do you determine that? Okay, we'll play it this way. You see that line right there? That's where we kind of had that gap up right there into this rising wedge. Let's clone that line. Let's take that bar. Let's put it here. Y'all already know what I'm about to do, right? This is why I love this stuff. This is exactly why I love this stuff. Let's take that bar. Hold up. Dang it. Dang it. Come down, chart. Let's take that bar. Let's put it over here. Right? And then let's pull it straight down. Right? Hang on. Let's pull it straight down. Y'all see what happened right there? What do y'all see right there? Y'all with me there? We've done this before, so there ain't nothing new, but we got to keep, that's why repetition becomes repertoire. This is how you determine a head and shoulder. You determine the move from based on the neckline to the head, right? Based on the shoulder, then you can determine pretty much how much the stock gonna fall in a head and shoulder pattern. Or the inverse of that, and inverse head and shoulder, right? Our new terminology that we learned last week, right? Come on, Sister Shanique, right? Right? That inverse head and shoulders. This is how you determine the length of potential value of move that you can get. So if you are planning to take a position in that particular trend that you may get out of that, you can play a little bit out of the money if you feel like, you got enough time and, volume and stuff to kind of help you get there. Little piece of chain for a little something strange campaign. So that's what makes this stuff so great, because there's so many different pieces of the puzzle, but eventually they just all kind of Lego into proper fitting. Once you really start to make it all make sense. So that length of move, right? Even if you just kind of pull it there, the same kind of rally, that length of the move from here, right? So let me draw on the chart here. You guys can see here clearly exactly what I'm assessing here. That way it's no funny money, right? Like, what are you talking about? You making that up? No, I ain't making this up. See right here? That point right there, when the gap up happened, that's when the move began. This point right here, where it kind of stalled out and it steamed out, That length of that the bar right there, trend bar there, is the length of that same on the way back down. After having that rising wedge, it just kind of exhaustion the buyers, whatever. And then on top of that, we had what tailwind from what? Economic data, et cetera, et cetera. So when I was posting literally up here that we may now finally get a chance to feel what? That 443 gap. Now y'all was here with me, so y'all know y'all my witness. I was talking about that 443 gap way back over here, right? Was I not?
Witness.
Right? And even more so when we got even in the middle of it, we was like, oh, we may really get a chance to what? Feel that gap. I really start getting confident. Then I said, we're gonna feel that gap, right? We can finally get a closed gap, right? Y'all with me?
Yeah.
We got the screenshot to prove. We're like, oh, we're gonna close that gap. And guess what? Did we not close that gap right there? We sure did. And so when it hit that gap and closed it and then break through it, guess what you're supposed to did at that point if it didn't break through it and go lower? You're supposed to turn it around and bought you some what?
False.
Gap calls all day, every day, right? Couldn't make this stuff up because you already had the perfect diagram. The market pretty much gave you the blueprint. Come through, Jay-Z, right? Whole, right? Whatever, the Blueprint album, right? It gave you the blueprint. How dare you say, I'm going to get greedy. I'm just going to buy me a ton of puts at the closure of the gap. When y'all know Wall Street is greedy. You already had the back door at your what? At your back. That was your floor. That was your pseudo support. It was a gap closure. We closed the gap. Instantly right there, you turn around and buy you a couple of calls. Even if you still have puts on, that's still good. But you definitely buy you some scalp calls to play for any kind of what? Top side bounce. Or to allow gravity to have its place, right? Or physics to kind of take its place. Right? Again, coming down that hard, you hit the ground at some point, you're gonna have to what? You're gonna bounce, right? That's the whole idea of a dead cat bounce. At some point you gotta bounce. It's not an endless perpetuity free fall. It's not that. It's at some point you're gonna bounce. The bounce happened. We wanted it, and it happened precisely where we had mapped it out at. If I'm lying or flying, y'all see it, right? It happened right where we said it was gonna happen. It happened. The money after that was just great because we just ratcheted it back up to the upside. And on top of that, it gave us 5 points. That's why we got that 5-point moniker right there. You got a 5-point move off that bounce. Couldn't make this stuff up. Not making this stuff up. This is why we go hard. This is why we practice. This is why this stuff makes sense, because you have to see it, hear it, play with it, assess it, all this stuff over and over and over and over again. Again, how many charts do you need to diagram before you feel like you can say you kind of on your way?
500 to 1,000.
1,000.
Right. Somebody say 500 to 1,000. What you would say over, Al?
10,000.
10,000 chart diagrams. 10,000. We're putting in some of that work right now. This counts. True story. This counts right now.
This was 100.
Right? And it's on YouTube. You can go back and play it later, or y'all know how we do. So again, this is what makes us a trader earn his or her stripes. Simple as that. This is how you earn your stripes. You got to figure out how to stay in alignment with what? The money flow. No and if buts about it. There's no emotions involved here. There's none of that. You got to stay in alignment with where the money flows at. Simple as that. If you are again in that mindset, then chances are you're going to have more success stories than potential failures. Or you're going to pay less tuition. I'll say it that way. You're going to pay less tuition once you're, more in alignment with what the trend value of the markets are giving you. Right. So some really good profit values came out this week, this past 5 days of trading, obviously coming out of last week too. And it was just, these are the kind of trades you just wait for. You wait for these moments, because when they happen, you're not really having any real true pushback. The market just say, nah, I'm just going to reward you hands down. So the profits that I was seeing, a lot of Discord groups and You know, the little stuff that I was even showing, you know, some stuff I was showing, some stuff I didn't have some other bigger plays in there. Doesn't matter. Just showing you that we had a consistent, you know, succession of opportunity that was just like no sweat, no pushback, no really obstacle. Just the market just kind of kept paying. The volatility was in play. The energy was getting bigger as the more it pulled back. It was just like, okay, this stuff in print. It's going to print. And the market was not that expensive. That was crazy about it. A lot of the, even in some of the ones that were out of the money, you know, now that they printed beautifully. I showed and discussed how I turned that in that one. Matter of fact, in that Tastework account, y'all know I'll be doing these case studies, weird as I am. That $17, literally $17. We turned that $17 into 800. Well, actually, a little bit over 800 now. Considering what added to it today.
How's Tastyworks compared to TOS in
Tasteworks
terms of order flow?
Is really good. Why? Because their main objective is option trading. They're famed for option trading.
I know they charge a specific amount for.
What's about false contract?
Yeah.
Yeah, it's like $1 and is it $1.20? Is it 89? I have to go pull it up because I got in with my black box. We had affiliation with them, so we got a discount.
Oh,
but I think it's still
got the BBS.
Say again?
I got the BBS.
Well, yeah, we have coupons that you can get when you go to open up an account through somebody like TD.
Yeah. I use your link.
Yep, we have a discount for TD Ameritrade, and we got one for we got some new ones too. I just haven't been currently in a while,
yeah, but I got a discount when I got BBS Black Box.
Yeah, and so Tastyworks is an affiliation that we're part with, and we also affiliated with TD Ameritrade. So you get.
Right. So I'm gonna look for your link for Tastyworks.
Yeah, I may or might not have, but I'll get it to you though. You know, no worries, I'll get it to you off the script. But it's really built for option trading, right? It's really because I sent y'all like the screenshot of a little small block. That's Tasteworks. And matter of fact, Opal Marquis, he be on a lot. You know, some of the screenshots he's posting his screenshots from Tastyworks.
Okay.
It's very clean, GUI graphic user interface.
Yeah, it looks pretty straightforward.
It is, and they do call outs over there too for free. They have live call outs. You can take their trade with them, or you just do your own thing. So them guys over there, they be working. You know what I'm saying, Brett? Respect.
I like the liquidity too over there. Like, as far as you getting filled when you're doing certain types of option strategies.
Yep, you don't have all that cumbrous and stuff that you deal sometimes. Maybe with Robinhood be trying to make you bid you up a little higher. They don't have to deal with none of that.
Yeah.
Order flow.
Yeah, really good, better order flow over there. If they feel you, if you in that right place, it's gonna feel you. It's gonna fill you with liquidity. They want to fill you over there.
I'm glad y'all reminded me. I'm gonna use Tastyworks tomorrow.
Yeah, I'm gonna switch over.
They have a good team too. Like I've had issues when I've called and talked to them. It has turned into like a whole hour conversation when we talk about all kinds of stuff about you.
Yeah, they solid over there.
Yeah.
I had an issue with one of the reps because I was calling about an issue that happened, and man, I talked to one of the manager. He's like, no problem, Miss House. Don't worry about this. What we do? Just disconnect your bank, attach it to it, and I'm gonna give you, this right here to kind of make sure we iron this out because we love your business. It was that kind of scenario. They threw me some perks. Oh. I don't want to go, but they threw me some perks.
Oh, you didn't have to get black on them.
Say again?
You had to get black.
Yeah, hey, you saved me from going there. We like your business, right? You've been here for a little while, so look, we're gonna make it. We're gonna make it right, no problem, right? And they threw me some perks on top of that, so I was like, all right. So they gave me some, I ended up getting they gave me about 20 free contract, option trades.
Nice.
Make sure they fixed all those stuff too, and they reset my day trade account. All in one. So I was like, okay. All right. So and I use that just the same way I do my Robin, because now I've got to the point now where okay, if I'm gonna trade them from that perspective as a income investment house kind of brokerage account, when I hit a certain threshold, I'm trying to do a withdrawal. Make sense? So I used to do that a lot when I was over there in the old disco room back in the day. I used to like, man, if I get it to a certain amount, I'm going to draw it. And I'll start with on a little bit in there for my own, thesis, because I got other stuff going, like what, 7 to 8 different trading accounts. That's how we start getting on this account. You just only work out a few, right? The rest of you just kind of monitor, right? Like, I don't really need it till I need it, right? So those are my workhorses, right? I Tasty Works course. I hate Robinhood guts, but I use it as a workhorse because it's
just easy.
It's just easy. It's cumbersome in some of the process, but it's easy. And then, of course, Webull has been growing exponentially. Webull is going to be that man. Look, like, keep sleeping on Webull. Got some next level stuff. They coming, right? And now they got fractional shares over there too. So
again, crypto as well. They got Shiba on there now.
And so now you got that extra where you can do all that what Robinhood don't do, or that some of the other ones don't do. And so that's how you kind of assess that. Especially if you don't have like 25K in one of those accounts, right? If you use it strictly for working, then I don't matter anyway because I got literally 12 different day trades I got because I got 4 accounts I'm working out on a daily basis. That's 12 trades, day trades.
Yeah, Tasty Works great for that. That's what I learned. And they let you switch between one and the other so quick and easy and label them right next to each other. You can literally create, like you said, 10 accounts and put maybe, let's say you got 200 in each one of them just to do one day trade every day. I definitely used it in that manner.
So that's just smart.
Messed up. Y'all done messed up. Y'all done told me you got to have 2 accounts in Tasty Work?
Yeah. We're not just saying this one account and a Roth. You can do a Roth too, and on top of that. So you can have
I got 7 of them on mine. I use that one for the regular one. Then I use First Trade, which is another one, but I use that as a cash account so I can just trade over and over again. And it actually it gives you all the money back the next day.
And they set up pretty decently over there. Right? So we know about T+3, T+2, and then T+1 settlement. They're pretty good, right? They're pretty good at getting you set it out pretty well. And I think, a lot of other ones starting to get there. They're catching up, but like you said, that perspective, that goes a long way, especially if you're in a cash account, right? So again, a lot of net positive, kind of like when y'all trade Meta, right? Meta 4, right? You have same day cash out, right? That money be right back. You ready to roll, literally, in seconds, essentially. So, it just, again, depends on what your risk or your trading profile, meaning, what you used to, how you trade, at the level of fluidity that you trade. A lot of trades or not, unless you can kind of figure out where's your niche value, how you can kind of assess markets, right? And so I'm always saying people because that used to be the hardest thing to get people to do, to open up more than one account. Because the first people to come up, I'm scared, I don't want to open up more than one account. I said, bro, they don't run your credit. Calm down, you good. Then you open up a credit card, it's just a brokerage account. Right? So no harm, no foul in trust. So open up many as you can. Why? Because it's going to be advantageous when you can have up to 6 to 9 to 12 or even 15 day trades in one day because you got multiple accounts. And then they start offering it where you can get multiple accounts underneath one profile and platform. That's even better, right? So now people start taking advantage of Roths now, right? Roth accounts, IRAs got option trading now.
Yes, sir.
You can option trade on your Roth.
E-Trade too.
Think about that. So you can, again, you just gotta say, just like, man, God, dog, so this is what I'm saying. The Joker can't be. They have no issues about whether they can put $25,000 in the account or not. They still got ample day trades they can play with if they're able to handle all that multitasking. So I love it because I'm bred in that kind of environment. So I don't have no problem. I post y'all two or three different accounts. Yeah, I'm working. See this one here with that. This one here, Tasty Work. This one here, Robinhood. This one here, maybe Webull, whatever. And just showing you, I'm just using the system at my advantage. Break the mold on trying to figure out a back door. Y'all know us, right? We don't play around, right? We'll find a way.
So what's the family's thoughts on E-Trade? So I have an account, but I haven't actually used it yet.
E-Trade?
Yeah.
What's far as to what now? What was that? I'm sorry.
I thought so. For Tasty Works is good. So what the family think about E-Trade? Is it I mean, I know all of
E-Trade
them are
solid.
pretty much similar, but
E-Trade Premier broker. They on the likes of Charles Schwab, Fidelity. They're on that level. Now, sometimes people, back in the day, like everybody, some people have, like, they're gonna have, gripes and certain things about certain accounts of others. I have certain gripes about TD Ameritrade, but TD Ameritrade is the banger, right? Like everybody got money got a TD Ameritrade account, right? At least a TD Ameritrade account, right? And that could be the same as when you think about like E-Trade. You got E-Trade, then you got E-Trade Pro, right? So different echelon of traders, you can take advantage of that, different little perks. Charles Schwab, of course, and Fidelity, all those like Ally Invest in this Interactive Broker, right? Interactive Brokers is definitely a grown man type of brokerage account, right? They do a lot of good stuff over there at Interactive Broker, right? They got the Pro and they got the light version, right? So that's for that more complex trader. Got, some of them got big money, they whatever, right?
They have a good screener too. They have a really good stock screener too.
Mm-hmm. Some of them have really good, again, those kind of perks. Those are things that draw customers to their platform. That's why I say when you get in the investment world, like what we're doing, these brokers are competing for your business. They want your business. They want your business. So they're going to court you. They're going to offer you perks. It's different when you're trying to get a bank account, all that dumb stuff. Like, look, stop fighting with these people on that stupid stuff. Get you something that puts you in the driver's seat where you can make some positive and power broker decisions. You're not going to get that anywhere else until you start opening up brokerage accounts. Period.
Right.
Period. End of discussion. You ain't ready to brokerage accounts. Say again, over?
Now, so they call them prime brokers. Those bigger brokerage accounts, those prime brokers.
Mm-hmm.
I know a lot of people who even take out asset-backed loans from them. If you have like a big ETF, they'll give you like 60%.
Really?
A check. Yeah, they'll give you a check.
Yeah, perks. So, I mean, you think about that, right? A bit leverage, margin, whatever, or just giving you the ability where you can use their their bankers. I mean, they want your business because they understand that this is what everybody can eat, right? Everybody can eat well because we're just using these financial vehicles. Of course, we know the stocks, whatever that we're trading, and that's the name of the game. That's the business. That business model of the day. So you gotta love that, man. You guys got. I mean, I know y'all do. For those who are so initiated in this, and we know we're all in from the aspect of understanding how growth is going to take us to the next level in this. That's why we humble and wanting to get the best out of it that we can, and we're serious about our training. We're serious about building on our knowledge bank to get better at this. Well, the benefits are going to come. They're going to come. Rarely do you see people walk away from this unless they really, if they didn't really give it all and they just taking it from a different perspective, mental. But if you stick with it, you're humble and you're serious and you just get, very stern about realizing that this is a discipline game plan here, where you got to be patient enough to let the market reveal itself to you. Then you'll figure out all the little nuances on the way, and you'll use that to your advantage when you get ready to assess the market or attack the markets. So that's why we have a lot of these sayings like, what, the trend is your friend, right? All this stuff like that. That stuff is colloquial for a reason. For a reason. Yeah, so we're not making that stuff up. That's rules of engagement, right? So guess what? The trend was our friend for the past, 1, 2, 3, 4, 5, 6 days. We just rode the trend down. And we used the line that we came out of the previous week, or the previous week, but basically the previous week, but yeah, that rising wedge pattern where it tightened down and the buyers got exhausted, and then we just needed a tipping point. Somebody to break that, break the bubble, a short-term bubble, and guess what? Let the air out of it. All the way back down to a point of what? To a gap fill resistance. Basic gap fill resistance to the downside, but support for call buyers or people going long. Mapped it out. We mapped it out. Right, which we always do when we try to come on in, figure out these plays and find out. We map it out, then we go from there. And so that's why when you're looking at the market for tomorrow, that's why when I assess, I'm playing this here, I'm playing for that inherent weakness or continuity of still weakness, because we have a clear resistance there at 448, 41, or 37, or just 448 even whole number. My stop loss is already preset. My downside value of profit is great because I could play it to the 200. If that don't hold, guess what? I could Test the next support that held today with the 444. If that don't hold, guess what? Here we go, that 443 again. I'll take those odds than trying to play these odds right here. Make sense? All right, we'll get that last line out of there. I'll take those odds before I try to mess with those others. Right? Because it's pretty much easier to assess risk once you realize, you know, where everybody's kind of stacked at. Right? Where's everybody kind of hiding out at? Right? So it's great, guys. You just got to be. You have to be a student of trying to learn everything you potentially can out of this, because, and in doing so, your rewards are going to be that much more greater than you would think for, you know, I'm just really chancing it. I'm just, you know, if I get lucky, I just get lucky. No, that's not how this stuff works, right? We're not finna do the, you know, we ain't finna, this ain't the dice game, right? This ain't Asher, Larry, and the crew. You know, we're gonna make some good decisions, right? And we're gonna use it based upon us becoming very familiar with the stuff that we probably used to look at, like, man, I'm about to care about all that. Now that stuff matters. Now we know geopolitical news, you know, national news aspect, local news when it comes to, you know, whether a company that's in a certain local jurisdiction, if it affects it or it doesn't. I mean, all that stuff matters, because this is you learning how to look at the global market in a first-hand lens and know everything that you can potentially learn about that affects your life anyway, from a product perspective or a service provider perspective. This stuff translates into your real life. True story. Teach you how to be a better managing house, so to speak. You are managing house anytime you got things underneath your control. You're running an online business, as we like to say a lot. You running an online business. Right? So you got to get excited about this stuff, you know, and for what it really is. We really break it down. It's really awesome. And you have the free will, purpose, value to be able to do this stuff. And nobody can come shut you down. Nobody, right? Can't stop you. Matter of fact, brother, we got sister Sneakers, you got a hand up. One second, I'm gonna come to you real quick, sister. Where you at, brother Derek? Where you at, brother Derek? You might pop in there. He probably came out. Brother Derek, you know, he's a silent warrior, right? But brother Derek, I think this past week, I think he up like about, I think brother Derek up near about 9,000 for the week. That's 9 racks.
Who?
Brother Derek, he got silent warrior.
That's what I'm talking about.
He up about 9 grand. Silently, he just doing exactly what we planned for. We mapped this stuff out. That brother was taking the trade. He was sitting there mirroring the stuff that some of the stuff I was doing. He was doing. He saw everything same way we tried. He just went out there and crushed it, and he did it silently. Right? You don't even know you were doing it. He just did it silently and made about near 10 grand.
I'm talking about. Shout out to that brother for taking that action. That's what I'm talking about.
But Derek has, that's, you know, your affection don't outside all the over. That's in there grind too. So I'm just saying, so we can't, you know, act as if we, you know, we're not putting in the work. We're putting in the work, and we're doing it with the care, caution, and concern. We're not, you know, we don't do like these other people. Nothing against them, but we, again, y'all know it. Again, you want to, if you don't want the producer jumping around, dancing all in the video, sometimes I gotta throw that out there. Right? You call the death row, right? Cause y'all do, we get down over here, right? We're gonna work. This ain't no just gimme house over here. We're gonna work over here. Because right? It's important that you have this, so if you are alone, you won't struggle to have to figure out how to make this thing happen on your own.
Can you hear me?
Yeah, we can hear you. Go ahead, sister.
Okay, because I have to play with it a little bit, because I got it on the USB, and I be confused with how to switch. But okay, I'm be quick. What did you mean by hold? Like when you said if it don't hold here, then I hold it there. How do you even do that? And
as far as what part of referencing here? As far as
okay, I guess buying a put in a put. I think that's what you was explaining, and you said if it don't hold here, then I'll catch it down here, because you said down. So I'm assuming you were talking.
Concerning the chart here that we're discussing, as far as let me see. I guess she's speaking about as far as what we're talking about up here for support and resistance, right? When we do our peak to trough, right now, Sister Angie put out a great video in the group. I'm sure y'all saw it, right? Because y'all know I've been on this peak to trough wagon for years, but I've really been talking about peak to trough really aggressively over the past, let's say, year and a half, 2 years, right? Because I've realized that if you learn how to channel the market properly and thoroughly, especially if you trade options, you're gonna win. Why? Because you have, like we're discussing here, you have all the pretty much the variables in play, right? They're on the table where you do not have to fight the market at that point. You know what I'm saying? So again, really quick here. Up here is clearly gonna be the what? The peak. Down here is clearly gonna be the what? The trough, right? Peak to trough trading, right? Old school. This is old school. Peak to trough trading goes back years, right? We're talking about millennia. This ain't nothing new, right? Clearly, we know what's going on here. Look right there. Clearly, we know what's going on, even inside that move right there. Clearly, we see what's going on inside that circle right there. Right? Matter of fact, let me change the color so that way it stand out. All right, let's do let's do a bold color like yellow or something. Clearly, that I want y'all to see this here, right? You got to see this stuff here, man. This stuff is awesome when you learn how to map it out like this. See right there? That little circle right there, a little over back to the resistance. And now, potentially, not this is potential. Because we got the small circle back down towards the 20 moving average. If it don't bounce a hole, if not that, we got the bigger circle back down towards what? The bottom of that support. Does that make sense? So either way you look at that, you have a complete diagram of just seeing what? All these different little what? Plots. All these different little, value plots that you can now trade in or around to make a proper assessment of what gives you the best bang for your buck in terms of opportunity. Does that make sense? Right? When you break it down like this here, now it begins to look more applicable to something that you possibly can manage. Because y'all know our universal saying is that what? Moving averages act like what? When our moving averages, they act like what?
Magnets.
Say again, over.
Magnets.
Magnets. The further you pull away from it, the more it's gonna try to what? Pull you back towards it.
Right.
Because it's trying to trade on what? On the time and money what? Money axis, right? X-axis is what? Time. Y-axis is what?
Money.
That's why the moving averages is supposed to be synonymous with a rolling time span of what? Time over money. In that perspective, in a real world scenario, it'll just kind of what? Trend along methodically up and to the right and make everybody money. Does that make sense?
Right.
So this is how you map that out. So when you say, okay, where's my top side? Where's my bottom side? This is how you map that out. You find that resistance. You find that support. You figure out inside of that what's your volume profile? How they've been trading? Is it more bullish sentiment than bearish sentiment, or is it the inverse? So clearly here, this outcome you can kind of somewhat see that they were trying to bring a little energy back to the market. See right here? That was the last 3 days, right? You see it kind of trying to get down to before it hit that gap fill. All of a sudden, the volume start turning what color? Green. See right there? More green there. Before that, what was the color of the trading volume on average?
Red.
Very red. See right there?
Bearish.
Very bad. That's that downtrend just kind of picking up steam on the way down. Even had a blow off top, blow down, on that one there with that big volume spike, to the downside right there in that candle there, or volume bar candle there. Over 2 million, dump in that perspective. That just kind of bottomed out. Look at the RSI. RSI telling you everything right there too. Don't make this stuff up. So everything has to play its part in a concerto perspective. It's a concert. This, that, this, all that stuff make up what we're trying to assess in the market. So this is what I mean by you have to look at everything on the chart and just pick it apart, like dissect it, reverse engineer all these different moving parts, figure out what they are, what they stand for, what their job is, and now when you put it all back together, bring it all back together after you reverse engineer it, you have a better perspective and a new profound respect for what this stuff really is about. Make sense? So that's why we say you got to get that chart time in. You got to get, these power sessions like this in, underneath your belt. If you can, use your village, use your family members. Hey, let's talk about it, guys. Let's do a little midnight session. Not midnight, but y'all know what I'm saying. Let's do a session. I came by that session. Y'all know what it's like. We used to be up all kind of morning, boy. Then we got to go to work and do all kind of stuff. Just be still in that room trying to get that information.
Mm-hmm.
Right? That's how if you really about that life and you want it that bad, you'll do it. But guess what? People who put that kind of work in now, what they doing? They're coasting. They're coasting a little bit through the markets now. Again, I can honestly say I remember when Stock God used to be comfortable just making him a quick little couple $100, and he could have made a lot more. Be like, no, I'm good. I'm straight. I ain't finna get none of this back, right? And people like myself, or Q-Tech, or Bullet Bag, we like, no, I'm finna maximize it. I'm finna get me a big bag. I'm in like about $1,200 or $2,000, and we still trying to squeeze blood out of Turner. Now, through his consistency of his discipline, it ain't nothing for Stock God to make 1,000 plus 2,000, 3,000, 5,000. He at that level now where he just like, no, I finally got my comfort level in place where I can manage my risk and my size, my lot size, and I can get those bigger payouts now. But it started with him just saying, I'm good for a couple hundred here, 200 here, 300 here, 900 here, and then he just kept building on his discipline along the way. See, that part of the game where I keep telling people the money gonna come. The money gonna come once you get your discipline right. The due diligence is default. I repeat, the due diligence is default. You have to put in the work. You can't skip that. It's what you do when you're in the battlefield determines whether or not you're gonna be able to capture that money flag. That comes from discipline. Not letting your emotions get ahead of your training thesis. Not letting your emotions affect your money. You're running an online business. It's you and the ticker. Those are the only players involved. Of course, we know there's market makers and all that stuff too. Another buyer, another seller, but directly from a direct value is you against what you mapped out in terms of what you think, like all those other things we're going to do. And then you're pretty much trying to capitalize on making the most effective decision based upon the rules of engagement. This stuff is not really rocket science. I got to say that because I know people like, man, I don't know what you're talking about, man. It's not. Again, we mapped this out, Yeah, we kind of mapped this out. We was ready for this pullback, right? We was ready. And so when it came, we just attacked. And now we're inside the channel. Now we're just trying to trade. Now, this new channel here. So again, there's your moments of potential opportunity kind of baked into those moments, right? You got those spheres right there, right? Look at it. I mean, you see what's going on there. You see clearly the resistance. You see clearly there within those points there of what the market is trying to show you in a lot of ways. Now the circles are starting to tighten down, right? They were kind of tight, concise. Then they opened up, right? Those 2 days right there, they opened up really big on those 2 days there. Now they started to tighten down again. See right here? Even if you come back down to the 2-moving average here, they're going to tighten down. But at some point, it's going to open up again once this consolidation kind of gets to a point and the market has to make a decision where it's going to go from here. Either up or down more. The majority of the money, though, it's already been made, right? Off that, the last 4 or 5 days. And so you just do what? Once that happens, you say, okay, we killed them there. Now we just wait for the next move and we just wash, rinse, repeat. Right? So again, not rocket science to us, right? We're going to make it make sense as much as possible. And we're going to stay within the confinements of what we can, handle and things that we cannot. We just we pull our hands back and we'll paper trade if nothing else, right? Don't put your real money out there if you don't have to. It's not worth it. It's not worth it. Get the game first. Get the game first. Then go out there and hold it down. Because you got time. The market ain't going nowhere. If anything, we might be setting up for a correction. That's a good thing. Why? Because people finna get ready to go discount shopping and miss the big run out of last year with COVID. True story. I'm waiting for it. I can't wait for the market to pull back. People like, man, but you're gonna lose money in some of your positions. No, I'm not. I'm gonna get a chance to add to them positions. Right? I can't wait. That's the whole point of me day trading here and there to make some capital. So when I get ready to add that dry powder to some of my long-term positions, I got to do so. Then I could just pull me a little Kathy Woods move without, with less money than what she got for it. But I can do that. I can assess and add to some of my long-term growth positions. All right, because this still is a long-term game plan that we're trying to establish here. Right? Now, no matter how much we love day trading, it still is a long-term game thesis here. Again, marathon, not a sprint. Right, so yeah, peak to trough, right? PNT, peak to trough. RS, resistance support, right? Right. Some people want to add something supply demand, right? You want to use the S&P theory, right? Either way you look at it, that's what we're trying to atone for in markets. What are my levels? What are the areas that I need to be focusing on? What is the investor sentiment? What's the volume? What's the ATR? What's the is there any economic catalysts out there? Is there any fundamental stories out there basically that can alter or move the markets? What's the continuation pattern looking like, or the lack thereof? Are we going to break trend or stay in trend? Right? A lot of different moving parts, but it all makes sense at the end of the day. Y'all with me? I know I'm going in one of my little diatribes in a moment, but y'all with me there?
Mm-hmm.
You guys with me?
Yep.
Yep, just muted. Sorry about that.
It's all right. It's all right. This is what it's going to take.
Yeah, definitely with you. I got you.
Y'all with me? You guys with me? Go ahead, Sister Shanique. Go ahead.
For sure.
Can you hear me?
Yeah, we can hear you. Go ahead.
Okay. Is this a XL ETF stock that you have up?
This is SPY. This is the SPY. Mm-hmm.
So it's just one stock.
ETF,
It's
ETF.
not
I'm sorry, you said ETF, right? So this is an ETF. You're right. It's ETF. ETF. Mm-hmm. Mm-hmm.
So it's just one stock. It's not a few compiled.
That's what it is. That's what the ETF is. Remember, ETF is a what? Exchange traded what? Well, guess you do what? You know what we do over here? We work, right? So what do you do if you don't know? You do what?
Go look it up.
So majority of the answers to the question that you're gonna have, sometimes it can be so that you can get what? Right away, right? Because that's a part of you also becoming what? A student of the game, right? At the saying goes, only the game can teach you the game. Well, guess what? We're gonna be on point, right? Because that knowledge that you're gonna acquire by putting in the work to get that kind of that information, it's gonna only culminate to you being able to kind of retain it better, right? You're gonna lock it in at this point because you have to put in the work to get it, right? You already know its relevancy is very important, right? Because a lot of the market is surrounded around what? Either individual stock or a mutual fund or ETF, right? Exchange traded fund, which is a collection or a basket of different stocks you can buy all in one, right? Kind of like your money market account, right? That's what a money market account somewhat is in a lot of ways, right? It's a bank ETF perspective in a lot of ways, right? Right. But it, obviously subject to the treasury, yields and stuff like that, right? Interest rate, whatever. But yeah, so definitely, if you're more comfortable with trading, the collection stocks like the ETFs, then you want to learn everything you can about, right? Those sectors, right? Or those indices, so to speak. That's why we go to stuff like, the spider sector, right? Come over here and we spend time over here learning this because the spiders ETFs, select the scenario as a whole is pretty much everything that makes up the market. But this is where you want to be at right here. You want to be in the spider sector, right? Because this is your world. This is your world in America. This is your utilities. This is your healthcare. This is your materials. This is your energy. This is your consumer discretion item. This is your consumer staple item. This is your technology. This is all that. This is your communications, right? This is, we could be all day. This is where you come to get everything. So this site right here, Sister Shanika, is going to become your best friend, right? Along many things that you're going to learn because this is your average everyday lifestyle wrapped up into one package deal. This is the selected spider ETF where these are sub ETFs underneath what? One bigger ETF, right?
That SPDR ETF is in a group of stocks that make up kind of like a group ETF. So all those different stocks that you may invest in individually, this is collectively.
Exactly. They all wrapped up into it. Ford, Tesla, Apple, they all wrapped up inside these different sets. And sometimes they're in several of these same different ones. So like we've done this before, like we come right here, like XLP. See right there? These are what? What is that?
Where you at? XLP.
Can you see it? You see it on my screen? There it says
okay.
XLP.
Yeah, consumer staples.
Hover over that. What does it say? What are these? These are called what?
Components in the S&P 500.
Right. No. What is the title? What is the value?
Consumer staples.
Right. So now, right beside that consumer staple, what do you see? What kind of icon is that up there?
A shopping cart.
So that means these are kind of stocks dealing around what?
Consumers.
So a shopping cart, when you go shopping, what do you typically put in your grocery bag, right? Things that you use and you need, right?
Right.
And a few wants as it is, but these are necessity-based items. Make sense?
Yes.
They're ubiquitous to your average everyday life. Make sense?
Yes.
So that means if there's hurricane, pandemic, famine, whatever, pestilence, whatever, at the end of the day, you still got to make sure you get your what? Necessities, right?
Mm-hmm.
Stuff that you need to survive with, right?
Yeah.
So at any moment, can you consider yourself not having these things at your disposal? Right? Because this is what gives you comfort, right? And living, right? Food,
yes,
right? Toothpaste, soap, all stuff like that, right? So how important is that ETF among a lot of different things out there if you had a chance to trade it? You would think that these things be very important. Make sense?
Yes.
Because you need them. These are household necessities, right? So right there, see where it says about this fund, that little subheading there, about this fund?
Yes.
Read that if you don't mind, sis, if you don't mind.
Okay. I'm trying to.
Then you blow it up. Let me see how to blow it up. It's a little bigger there. Oh, let me take off my little scribble scrabble too. I got my scribble up there. 1 second. Okay. Yeah, go ahead. What does that say?
Okay. The companies in this sector are primarily involved in the development and production of consumer products that cover food and drug retailing, beverages, food products, tobacco, household products, and personal products. Component stocks include Procter and Gamble, Philip Morris International, Coca-Cola, and Pepsi.
So again, what do you take out of that entire paragraph?
That basically the partnerships and connections that are made of these stocks basically cover things that you need or people buy and need every day.
So again, famine, pestilence, hurricane, pandemic, tidal wave. You still got to eat. You still gonna need your household products, right? You're gonna need. That's why they call them what? Consumer what?
Silver lining, silver plate.
That's why they call them what? Look at the name of that. See, that's why they call them what?
A silver. It's a name for it here, right?
Right there. See at the top. You reading it. What? That's why they call them what kind of stock?
Oh, consumer staples. Sorry.
Consumer staples, because they're staple items. A staple item, right? They're staples. So during the middle of a pandemic, you still had to eat, right? You couldn't go outside, but you still had to get food, right?
Yep.
Toothpaste, right? All that stuff, right? A lot of those companies that you see in there, that some of their name there are companies that make up make those items or carry those items. Make sense?
Mm-hmm.
How many of those companies can you have?
All of them.
How long is your money? That's the question. How long are them ends, right? You gonna do a little straight up the chain, or you gonna break the back the brake truck up? How you want to get it? Right? Let's go.
You make me answer that.
Right? Because think about this, right? And that's what's great, because during the pandemic, where do you think people were running to for a safe place to put their money in terms of a stock or ETF? You know, everybody was going to have to steal what? That they needed, right?
Mm-hmm.
So how we making that connection? How we close that bridge? That's not rocket science, son. Ma'am. You see this, right? You see, oh, that makes sense. See what I'm saying? You don't have to go to MIT or sit in somebody's school to know this. Why? Because you an average everyday person that spend money, they got family, they got bills, they got necessities that you got to take care of. Make sense?
Mm-hmm.
Now you know in a moment where if there's something going on, even on a global level, like we did with the pandemic, the one thing people cannot be without is what? Food, toiletries, right? Make sense?
It's yes it does. It's a lot of food all over the world. So when it says food here, what food companies are they
But
covering?
you in America now,
How
see now you getting all fancy on me now. Now you know you in America, you over there trying to figure out what they eat over there in Austria. Like, hold on, you gonna get your sauerkraut. We gonna get your sauerkraut
I'm
from
trying to be
Germany.
like, cause I'm trying to be like, is there international consumer staple XLP 500? Is there
Well, no, but this
international when you
is
go
this is
out?
American based. But keep in mind, now you know America is the land of decadence. Now we did have the conversation before now, but but just for recollection, because this is good. America is the land of decadence. You can get beluga caviar that come out of the Caspian Sea. Is the Caspian Sea in your backyard?
No.
It's over there in Europe, right? You can get Kupalea, what it called? I'm about to mess the name. It's Kapala, what's it called? Kupalea. That
Calamari.
No, it's the coffee, right? That very expensive coffee. That only way you can get it when these certain lemur type little animals eat the berry and they poop it out. They collect it, clean it, and they grind it, roast it.
Oh God,
That very
that's
expensive
gross.
coffee. It's called Kapalua or something like
Kaka
that.
coffee.
Y'all know to my
Yeah, I
that
do.
coffee costs you about $500-$600 a pound. Only way you can get that is you have to have it imported in. Make sense? Again, America's the land of decadence. How much food do Vegas throw away every night?
Billions.
They throw away enough food to feed the whole West Coast. And do you think they care? We're talking about black truffles, white truffles, Caspian beluga caviar. Think about your most expensive foods out there. They throw that stuff away. Further sale type of salt. That's the most expensive salts out on the planet. They sprinkle a little bit on there and they throw that, prime real chicken. They throw all that stuff in the trash can, and then they would not allow them people to get that stuff to the homeless people.
Right.
Sad.
Lobster tails, jumbo tiger prawns. They call them prawn with tiger prawns and all that squidgy stuff. I mean, again, the type of the ahi tuna that them big tuna that costs about $1 million for about a 700-pound fish. It's all caught up and out there on the buffet table, and then if they ain't eating it, they throw it away. So that means they're doing that every night. That's not like one event. That's every night.
You got to just wait in the back.
If you're smart, right? You better with
That's
the truck.
it.
Like,
No,
back the truck up.
say they can't give it to you.
But see, you get my point.
Yeah.
You're in the land of
Dumpster
decadence,
dive.
right?
It says 40% of all food in the United States is wasted.
Wasted. 40%. That's a lot.
Yeah, they did a video about that. CBC.
Right.
So,
yeah. I mean, y'all on it. But this is what I'm talking about. So when you think about this from a place of necessity, how important was those that need during COVID? People was like, they were locked in for most cases if they didn't have the ability to get their food delivered to them because they need to kind of go out there and brave catching COVID to get food to feed their babies and stuff like that because they didn't have, you get what I'm saying? There's different stages and layers to all that. It depends on where you at economically, financially, and technologically. Because guess what? If you was able to and you had the means to, you did all that stuff through the value of what? Instacart, DoorDash, stuff like that. They could deliver your groceries to your household. You have to go out there and brave catching COVID. So there's always some kind of technological bridge being implemented, innovated to kind of help bridge what? The consumer to what? To the product at the end of the day. Why? Because they want your what? They want your business. Same way we talk about these brokerage houses. But in this case, of course, this is a very defensive stock to be in. Why? Because can you wake up and can you go about 2-3 days without brushing your teeth? Probably not. You need that too, right? But it's just getting thick up here, boy. Let me go get me some tree bark or something, boy. You be out there with a tree bark, getting all up. All that stuff make up the XLP. So this was one of the stocks that had one of the biggest performances during the thick of COVID. Why? Because tobacco, household products, cleaning stuff, Clorox, right? Stuff like that. Pepsi Cola, right? Hormel, Campbell Soup, you name it. So look right here. So if you look at the XLP, right? Look at this stock right here over the past, right? Over time span here. We're just going back, even back just January, right? But we'll go back to September of last year, just a year from today, right? This time last year, the stock was sitting at around about what? How much was the stock sitting at last year? See that price down there? What was the price of the XLP?
$63.69.
Here it is. Here it is today. How much is it today?
$71.99.
So just slowly but surely just climbing to the upside. Good chart.
How could a stock like this go down? Well, like, all right, I'm not gonna go there. How?
There's pullbacks and people take profit at some points. Of course, you know that's part of the game to make a little money along the way if you can, right? But what's interesting about the question you asked, the pullbacks are not that what? They're not that significant. Make sense?
Mm-hmm.
So if it dips, goes up $5 and pulls back $2 of that $5, that's good. That's a good thing. Why? Because you get to add on some of those dips, right? As long as there's no kind of adherent, fear that it could go down even more, right? You just have to add more to that position in that moment, ride it back potentially higher. That's what the pure essence of investing is all about, because it's about dollar cost averaging.
Rinse and repeat.
And it says,
So rinse and repeat.
Yeah, wash, rinse, repeat. That's what this is game about. This is about building long-term wealth, about putting your money into these financial vehicles that give you the best return or rate of potential return on your investment, and you just sitting there. Why? Because you say to yourself, is there ever a need in American history where you need not, where you would not have a necessity for food?
Of course not.
Think about it, right? See, not rocket science from that perspective, right? So if you say, well, if I can be in a place where if I have to worry about an individual stock, I just buy a collection of a particular scenario that gives me the best of all those in one. Make sense?
Yes.
And becomes a safe place because over time, it can gradually just go up and up and up and up and up and up and just give me the best a good return on my money, because it's a defensive play. It's not aggressive. It's a low risk, low beta play where I could just watch it gradually increase over time.
No.
Does that make sense?
Yes. It says number of holders is 32. This is a personal stock, or is this a general?
Say that again. I missed that. I'm sorry.
Okay, it says number of holdings 32.
Okay, yeah, so holdings. If it's an ETF, that means it's a basket of stocks, right? Or collection of stocks, right?
Okay.
It's ETF, right? So that means it's a collection of different stocks wrapped up into it, right?
Right.
So what is a holding? Dude, don't say
Think about it.
You just said it.
No, wait. I'm gonna look it up.
But before you do that, now this is quiz time. I'm not gonna let you cheat this time, because you already know. You just said it's a collection of stocks. That means if it's a collection of stock, what is the individual holding? It's just what? It's holding all these what?
Stocks that you're holding.
Yeah, there you go.
Where my itch cootie guitar? Let me go get my itch cootie guitar.
Right.
You funny, sis. You gotta make that one.
Think it, you see what I'm saying? So think it through. Use that value that you already know as a consumer. Now you translate that to the what? As an investor now, as a financier, right? Or a benefactor of being able to put money into these stocks and use them for what? Your gain, right? Financial gain, right? A lot of this stuff I keep saying it's not rocket science. The information
So that means it's 32 stocks. That's all that means. That are being held.
That make up this what? Container or basket or this what? ETF.
So it's 32 stocks.
You got to keep saying it because you don't want to believe it for some reason.
No. I hear my children. No, that I hear my children. It's 32 stocks that are being held in this ETF, which is XLP.
Yes.
So let's go there. Since you asked that question, because keep in mind, you should be following along with me right now. You should already have this up right now on your phone or your laptop or your computer and following along. That's what training is for. It's about hands-on training. You need to pull this up so you can play with it too and to see this stuff. So that won't feel like, I don't know how he did that, where he went to. No, you don't. It's recorded and you get a chance to do it in real time. That's why training is important. You got to get your hands dirty. You got to, as you say in the South, when Grandma Bima put her foot, she put her foot in it, you know that pot gonna be good. That thing gonna be smelling good, tasting good, right? Right? Y'all know what I'm talking about with myself. Even though, no matter where you at, you know when Grandma put her hand in there, it's gonna be right, right?
Yep, grandma's cooking.
You already know what it is. No mistake
like,
about it. Grandma ain't got no seasoning description. She already know how much to put in, when to put it in, and all that. She seasoned.
Kwame Brown.
Right?
Mama's cooking.
Mama's cooking style, right? Mama's cooking, right? That's what makes this stuff exciting. So come play with it. Come get used to it. So the portfolio is pretty much what is a portfolio?
A portfolio. I don't even know why I just went to answer that. It's an accumulation of all your trading activity.
Right? Or different stocks that you hold, right? Or just a regular portfolio, like a model. She have a portfolio, or he may have a portfolio. What? Their work, right? Their pictures, whatever, right? It's a portfolio, right? Yeah. Click on that, right? Yes. The portfolio value is pretty much what? See, right? The first words came up. What is that?
Holdings and weightings.
What is the holdings again? We just talked about that. What are holdings?
The stocks and the ETF.
And then the weighting is probably going to be what? Think about weighting. What is a weight?
How much is worth or value?
Right? Or the weighted ones that carry the most value inside of that what?
Inside of that ETF.
You're going to get this work today. You're going to learn today. You're going to learn today.
And then I'm going to be acting up at 4 a.m. in the morning tomorrow.
And that's good because that's what you're here for. See, that's why I say everybody's at different stages of their learning in this. Even though we do this in the group setting, but we meet everybody where they're at. Why? Because guess what? Collectively, you got a lot of different brilliant minds that can all add something to the pot. Does it make sense? Yes. There's no pressure to learn, and you have every bit of an incentive to get this. Why? Because this is your future that you're trying to plan for. Make sense? Yes. You're essentially trying to cut out the middleman and put your money to work for you directly, void of a Miss Charlie, a Miss Ann, a Miss Becky, or whomever that can try to discriminate, whatever. See, you gotta deal with that. Make sense? So this is the importance of this, right? So when you go forward, start thinking and moving and speaking the tone and the dialect, it all begins to make sense to you all of a sudden now. Oh, that makes sense. So what that says, holdings and weightings, right? These are some of the top premier companies that make up that what? ETF, exchange traded fund. So who's the top dog in here? Just by looking at this list right here. Top dog earner in this ETF. Top dog earner.
We're looking at Procter & Gamble.
Say again.
From what we're looking at here, look like Procter & Gamble.
How do you know that?
From a 16.29% weight.
How much?
A 16.29% weight.
I'm sorry, was that rocket science?
No, it wasn't.
Are you gonna lose your sleep because of that tonight?
Huh?
Are you gonna lose your sleep tonight because of that?
Oh no, I'm actually probably gonna stay up.
You got heartburn?
No heartburn.
Is your elbow hurting? Did you hurt your knees getting that information?
Nope.
Blew you back out.
Ain't gonna hurt getting it.
You blew you back out. You got a headache? You got a headache? Did you get a headache from reading now?
Nope. I ain't bust a blood vessel.
See? But how important is that information?
Very.
Because now you can buy the whole ETF, or if you really like what Procter & Gamble all about, you can buy what? The individual what?
The individual stock itself.
Because you know it makes up consumer staples, and it has a great model that meets what the average consumer with their products that they offer, right? We're talking about food, we're talking about toiletries, we're talking about everyday what? Necessities. Make sense?
Now, okay, that's what what I wanted to know in intricate detail. How do you break that ETF down? How do you know what that ETF food holding is? You know, so yeah.
But keep in mind, don't just look on food. It didn't say just food. It said what? Consumer what? Staples. That means it ain't just what?
It's not just food.
So we just talked about other stuff that's in there. It's also what? Matter of fact, I'm gonna quiz you before you even go there. I'm gonna put you to work. Right? Do Walmart only carry food?
No.
Philip Morris. I don't know if you know about Philip Morris or not, right? Especially if you know about anything about Richmond, Virginia. You definitely should know about Philip Morris, right? What do Philip Morris produce? What do they make?
Not sure.
They had one of the biggest lawsuits in American history, and they still paying it out today.
Jules.
Tobacco.
Cigarettes.
Oh wow.
E-cigarettes.
In the block, that's Philip Morris owned that, right down there in Richmond, Virginia. Got investment property down there. So come on, know the little, it's right off 95. You can see it over, right? Philip Morris, biggest lawsuit ever in American history, right? Because the whole Surgeon General cancer scenario like that. So that's not food. You can't eat nicotine. Well, some people let them tell they can. I survive on cigarettes. Good luck with that. Right? Good luck with cigarettes and water, huh? You about that life, man. You think you bad, huh? Right? Right underneath that is a company called what? See right there?
Altria Group Inc. Common stock.
Right. What do they make?
Makeup.
Altria Group. Think about this. Altria Group. What do Altria make?
What do they make?
See right here? What do they make? This company right here, Altria. What you about? I don't know about that. Well, guess what? They kind of do the same thing this company right here do.
Yeah, Altria bought Nabisco and was Philip Morris. Yeah, you got it.
They do tobacco stuff too. They in the cannabis space. They're trying to get in that space. They do a little bit. So now I'm gonna get a little, make it a little harder now.
Oh, they for
right here.
Smokers.
This one right here is one of y'all favorite companies. This company right here is one of y'all favorite companies. Y'all don't even know it. What's the name of that company right there? Say again.
Mondelez International.
Mondelez, right? This is one of y'all favorite companies. Y'all don't even know it. Why do I know this is one of y'all favorite companies? Do y'all know why this is y'all favorite company? One of y'all favorite companies? Put two and two together. Apparently, they must make something that you like, right? And it's in the realm of what? Consumer staples, right? So guess who underneath Mondelez?
I'm looking right now. That's why I'm going.
I'm happy you said that. That's how you get. They make what? They make what?
Oreo cookies.
My man, come through, brother Al.
Chips Ahoy.
All y'all Oreos and Chips Ahoy. That's Mondelez.
Club Social.
Y'all thought it was Nabisco. Y'all thought Nabisco was a private company that had no. Y'all took the.
Freer Halls. Oh, they make halls too.
They make They make what?
Wow. They do a lot of dairy stuff too.
That's why I said that's one of y'all favorite companies. Y'all didn't even know about it.
Philadelphia.
I got some of that in the cupboard right now.
I do not know about that.
So wait, how they percentage is so low? That's interesting.
Is Oreo cookies a necessity? Stop playing.
Since the pandemic has been.
Oh yeah.
Hold up, brother. Boy, it might be in my household. Boy, hey, I need the Oreo cookies to come.
Bring my Chips Ahoy.
I'm gonna need them Chips Ahoy cookies to calm these kids out. Y'all better give them.
Oh, they make tapes too. They got tapes under them and Stride.
They make what?
Tapes and Stride. They got tapes and Stride under them. And Ritz.
So that's why I said that's one of y'all favorite companies. Know why? Because y'all, there's a report that literally came out the other day dealing with inflation. And they said that these are the things that people stocking up on because of inflation. What they stocked up on? Ritz crackers. Y'all remember that? We watched Ritz crackers, and it was what was the other item? It was something else. And guess who produced that? Mondelez. Wow. So who people stocking up on Ritz crackers all in the store? You remember that? See how this stuff all connect? See when you in the information age and you know how to query stuff and know what to look for. See how it began to all make sense?
And Ritz crackers used to go hard with the chili, boy. Dude, I don't know what y'all talking about. You ain't
all this time y'all been sitting there loving all these things, and this company right here was responsible for you to have that. Now imagine if you was invested in Mondelez way back in the old days. How long Ritz crackers been around?
Ever.
How long Oreo cookies been around?
Since I was a kid.
How long is Chips Ahoy, the Keebler L, all that stuff been around?
At least 80s, 70s.
Yeah.
At least.
Well, I'm fairly young, but
the Bisco left St. Louis in 85. So I know that's been, man.
What my Pennsylvania family? Anybody here from Pennsylvania? Anybody from Pennsylvania here? Or live close to Pennsylvania? If you Delaware, Maryland, right? What's the most famous landmark that they got in Pennsylvania when it comes to food?
Hershey's Park.
Say it with your chest. Say it with your chest. And that's from the Caribbean. She know it. God dog. Hershey, Pennsylvania.
I was born here.
The famous Hershey chocolate plant. Other side of, matter of fact, Turkey Hill. Y'all know I know this stuff because I've been to the Poconos a few times or a couple times. Right? Y'all know if you've been to the Poconos, that's where people go to get hitched and married, and they got out in the mountain. And people like, I got to go to the Poconos and experience that. But you're gonna pass by the, Hershey going up to the mountain area, right? Right. Most infamous, chocolate manufacturer we got living on the entire planet, Hershey's. Who's their competitor? Mars. Where's Mars located? Y'all know Mars. Mars make what? Almond Joy got Mounds. Mars don't. Mars candy. They make
never Almond Joy fan.
Almond Joy. They make M&M's. They're out of what? Where are they located? But like, nobody know that stuff but you, African boy. They out there in California. I actually went to their factory.
Yeah, M&M's is in California.
No, they out there. They're in they're in Colorado. No, it's Colorado. Someone says Colorado. Colorado, I think. I might have messed it. I think is it Nevada or Colorado?
They was in Culver City, man.
What was it? Culver City. It's Colorado.
Culver City, right? California.
Oh, which one? I've been to. I'm sitting there tripping like, where I've been? They got a. It is. I was right there. It's California. See, I get mixed up. I've been a lot of places, but I've been to. I got pictures of all that inside the factory, all this stuff. These places you wouldn't even think about, right? Or like, okay, well, what makes these companies so important? Because guess what? They make up these. I guess you want to call them ancillary items, but they're part of your average everyday stuff that you feel like you gotta have. But of course, they're not like meat, beef, chicken if you like that, and staple food. But they're still part of staples, right? So again,
M&M factory, Mars Wrigley, right?
Yeah, well, it was a woman that created that too. Is a woman. They might have moved. Man, I gotta dust out my old picture. Man, I got some memory stuff. But I gotta pull some of that stuff out. I got some stuff, right? Right, but I mean, you think about that, right? Hershey, Mars, Ritz, all these different players, all this stuff is right here in your consumer staple perspective. And they may be individual company, but they get bought up by a bigger what? See, that's how M&A work, mergers and acquisitions work. They get bought up and be a part of a bigger company, and now they're part of, this is Nabisco. No, that's Mondelez. What do you mean by that? They're part of Mondelez, right? That's how this stuff works. Right? Get excited for learning how, the players of, this stuff really pay, how it pretty much gives you a real loose snapshot of how business really works, from mom and pop aspect to a decent corporation to that of a conglomerate business that now umbrellas them underneath that business plan, and now it becomes a part of their what? Starts with a P. We talked about that earlier. Starts with a P. Now they become a part of their what? Their what? Starts with a P. We just talked about models have a what? Models have a what? Models
portfolio.
Have a what? Portfolio. It becomes a part of their portfolio. Make sense? So you see the weighted value of some of the players that's in their space, what keeps them stocks probably doing pretty well. Mondelez does very well. Mondelez Mondelez type of stock that just goes up and under the radar. People don't know about it. Matter of fact, let's click on it real quick. Just on it, right? I'm gonna show you this real quick.
Three Musketeers, Big Red, Bounty,
Wrigley's, all those like that.
Yeah, Lifesaver. Milky Way, Orbit, Skittles, Snickers, Starburst, Spearmint, Twix.
Y'all playing around.
Original Rice.
Y'all playing around. You got that stuff all in your household. Don't even know what's going on. How them players, how important they are.
That's
Winter
my
Fresh.
belief.
Y'all remember Winter Fresh gum, huh?
Yeah, Winter Fresh chewing gum and all that.
Yes.
Oh, that's your concession stuff. Concession stuff. Look at the 5-year chart on one of the leads. Stop playing. Look at that 5-year chart down there. Stop playing. Look here. This is 2016, $43. This is COVID. How much is it? Let me go up. Hold up, right here. Hold up. Yeah, right there. It ain't showing the whole price up there, but it's up there. About $62. That's just rolling along. As you see, that 60 back at the top right there, but that's just rolling along, creeping up. Now, if you had to think about owning this stock long term, would you have any fears about owning this stock long term?
No.
Because of what the products that it has underneath it, right?
Well, it's not even the products. It's more so the what the company offers, snacking, and I don't think that would ever go out.
That's the still products, right? Because it's stuff that you're familiar with. You grew up eating a lot of their stuff, right?
Is that considered switching mode? A good switching mode for a company? Like when they have something.
Moat, like meaning they got a lot of what, because the products that make up their company that give them the moat is more determined by, it can be sometimes product orientated, but it's more detailed around the money that they've been able to kind of accumulate over time, because this always been a continuity of what, a need for that product. Now you can say it that way too, but it's a little bit of both. It's money and product. Make sense?
Yes.
So when you look at a company like Apple, right? Apple obviously has a big moat, right? They got all this money in the bank, all this cash, because they got a high-dollar item that people keep running back to get every time a new one drop, right?
Yeah.
Now, it's not really worth the material it's made out of, because it's overpriced fluff, right? Marketing, right? But they convince people to go along, get on it, and they just keep falling for that trick, right? So of course they've been able to kind of just amass a pile of cash over time. Well, guess what? They can take a hit if they can't innovate properly. They can go through a R&D, research and development, and still survive. Why? Because they got all this now money they coerced out of people by getting them to go along with the But you can't do that when it comes to food, because you got to eat every day, unless you fasting like a monk, right? So Tibetan monk, right?
Yeah, like now, yeah.
Right? And some of y'all like, man, look at it. Right, I gotta have my cookies. I gotta have my Oreo. I gotta have it. I'm just saying, when they say when D-Day happened and they fire all these nuclear bombs out to try to blow the world up, the one thing people gonna have in their cabinets is what? Rich crackers. They're gonna have Twinkies. Twinkies. They gonna have them Twinkies in there, but I got that box of Twinkies in the garage right now. Let it go down.
Oh no, Mars is private. They're not public.
Go ahead.
Mars is private. They're not public.
Yeah, Mars is a private company. They're not in that gauntlet. Hershey's is though. Hershey. That's why I was saying that difference between Hershey's and Mars. Hershey's obviously is a publicly traded company. You can actually invest in Hershey's chocolate. Right. So again, it just shows you there's so many different opportunities that you can get yourself saturated in, and these companies here pays a dividend. Right, they pay a dividend here.
I was watching the Breakfast Club today. I wound up falling upon the video of the Wall Street
Trapper.
Yeah, Wall Street Trapper.
Chop it up.
And he mentioned ETFEB.com, like where to go buy ETFs. Would you recommend that website, or?
Let me ask you this here. Here's how this stuff works when it comes to you getting information from everybody else. We are in a business that requires you have to do what? Research what?
Research.
Everything.
Do your own due diligence.
It's a back testing of how one thing connects to another, it leads back to a source, right?
Yes.
So when we think about sourcing information, what we consider to be primary sourcing, right? As y'all know, we come from that gauntlet of information age people, right? Source up or what?
Shut up.
They source up or shut up, right? Because here you really have to put your money where your mouth is. In this case, you got to put your brain where your money is going to land, right? So you want to have the best information possible. So If it's a website, you go look through it. If it got all the stuff that you see that pretty much is ID here in so many ways directly, guess what? You can use it. You can use anything out there. It's all about what? Data collecting, right? Data harvesting, data chest. Over time, you realize, how can I narrow that down to get, go straight to the source faster, get what I need from it because it's easier to dissect it and then move on, right? This is about what? Being able to get information quickly, fast, process it, and move on. Why? Because stocks are not sitting there to wait for you to go through what? Reading through all these little fluff papers to get to the what? The meat of the matter. I need to see it, understand it, digest it, output. I'm in the trade. Or what? I'm not going to touch it. Right?
Now you come to your family.
Take it over.
I said, for now, just come to the family. We know where to point you and where to direct you.
Yeah, well, but that's a hard thing.
Thank you, Chris.
Period. Point blank, period. That's the point of having a social group or a family where you can come to, because again, it alleviates a lot of that stress. Now, that don't mean you just, you don't put it in the work in, because guess what? You have to put that work in. You don't have to. Right?
I plan to with my money.
Ain't no such thing as a dumb question, but sometimes, a lot of the questions that you may already have, you could already get what? The answer before you even answer. Right? So there's a saying in Wall Street that what? Here's the saying. Investing and trading is not a lazy man's game. If you have a problem with reading financial reports or just reading script values of news that's come out by the company, this, that, the third, it's gonna be like, I ain't got time for all that, right? But eventually you start to realize, this stuff is important, right? Because you're making a financial decision. It's the same way when you do your due diligence to buy a house, a car, a favorite car seat, to protect your child for safety. Make sense? What's the safety rating? No, you need to put me in anything. That junk, that's too plastic. No, I need some. No. See, your money should be treated the same way. But unfortunately, a lot of people don't look at money from that perspective, right? They don't realize that this is your lifeline. This is your resource value that you have that can really catapult your situation, right? So for us, we take this stuff like, look, this bread and meat, right? If I don't research properly, I don't eat. Simple as that. Because we have direct connection to what? These opportunities, right? These financial vehicles, these stocks, whatever, ETFs, the whole nine. So that's why this stuff becomes it's fun. When you really get to the point where you really realize the importance of it, it becomes fun. Yeah. Why? Because every day is like Christmas. It could be an $8,000 day. It could be $80 day. It could be an $8 day. It could be a $10,000 day. $100,000 day. It could be whatever you choose to be based upon your lot size value that you can offer in terms of your risk versus reward and what that asset may offer you in terms of opportunity. Make sense?
Yes.
You're not gonna get that anywhere else. You're not gonna get that riding the clock for 8 hours. You're gonna pull your hair out, 2 hours in. Like, man, I can't take it. I'm out of here. I could be at the house right now getting in on the option position. I can't do that because you at my desk every 2 seconds to my son. Look at this expense report. Man, you don't get out of here. I'm trying to expense my brokerage account right now. Watch out. Right? Move on, boss. Move on, boss. Right? You got 2 weeks before I get you the pink slip. I'm always about out the door as it is anyway. Right? That's what we like, fire our boss. That's the mindset you should have. Why? Because this is a part of your daily bread too. Why? You live in America. You know these products. You know these companies. How beneficial could it be if you can go direct to them and benefit off their work, their hard work? It just makes sense at the end of the day. Colgate Palmolive. How important is Colgate Palmolive? Right? The name tells you everything about it. Colgate Palmolive. What they make?
Sometimes the brand, right? So
Colgate Palmolive. Now you know, I don't wear Palmolive. Colgate and Palmolive. They make
Palmolive
what?
is dishwasher soap.
And then Colgate is what?
Toothpaste.
Stop playing. Y'all act like y'all know this stuff. Y'all finna stop playing with me. Y'all know, y'all be up and down them shopping aisles all day long, surfing through them aisles. Y'all know that stuff. Y'all just seen it. Colgate Palmolive. It tells you everything about that stuff right there. Everything. Now, how many of y'all still take y'all dishes down to the local stream and use milk thistle and neem plants to wash your dishes?
I like that. Milk thistle and neem.
I like that stuff like that because I'm on that side of the house, but on average, that ain't what's happening in America, right? They going right to get that Palmolive or that Dunn or that whatever you use. Maybe
that Dunn. What you know about that Dunn, man?
That Dove. That Ajax, that's when you broke in your car, you get that Ajax. That stuff be cheap. You get $1. That thing be strong though, but you still food bubbles. You clean.
That's funny.
You know, they say like dishwasher detergent. The cheap stuff. Right? Y'all know what I'm talking about. So get what? Consumer staple. Because what? It's a necessity aspect of what? Your daily life. Right? Colgate and Palmolive. They did with what? What do Colgate and Palmolive have? Oral, personal, home care, pet nutrition, oral health, hygiene, home care, sip, all that. And guess what? They're in North America, Latin America, Europe, Africa, Eurasia. Like, look. How long they been in business? See right there?
Around about 1806.
Way before any of our people were born. Got to go back.
They probably financed slavery. I gotta throw that out there. No, I just can't. It's not. I don't cut up tonight. But 1806. That means they have what? Track record. So if they've been around since 1806, do you think they're not gonna be around maybe for another 100 years? Maybe another 200 years, possibly. See, that's that next level.
We need to dish soap to clean and brush our teeth with toothpaste. They're gonna be in existence.
Always gonna find a way to come up.
First prayer packages come with the Colgate toothpaste.
You know, unless y'all on that, got the 10 for a kufi on, man. I don't want none of that fluoride, man. That stuff right there, man. That fluoride, that stuff mess you up, man. That stuff mess you up, man. Mess up y'all know they're on that fluoride.
Yeah.
Yeah.
Oh man, toothpaste, man.
So that's the importance of all that. Right? Coca-Cola offers self-explanatory. Pepsi-Cola. Pepsi-Cola is so important, man. Pepsi-Cola, man, look. Pepsi-Cola sells everything. Your favorite potato chips? Pepsi. Own it. Yep. They own who? Who they own? They own what? Lay's.
Yep.
Lay's potato chips is owned by Pepsi. A lot of people don't even know that. I mean, Pepsi is such a type of stock where you, again, this is one of the ones you gotta have in your portfolio. Why? Because it's a banger, right? It has a lot of stuff that everybody love. Quaker Oats. They got Quaker Oats. Ain't your mama. They got Ain't your mama.
Your mama.
They got, you know, back in the South, Ain't your mammy. Back in the South, Ain't your mammy. Y'all cut up. Yeah. Right? Quaker Oats. Doritos. Look, Dorito, Cheeto, Tostito, Frito, Ruffles, Santitas brand. They got all that.
Everything.
A lot of people ain't even know that.
Mountain Dew, Tropicana.
Bro, they got Captain Crunch.
Yep. So they got cereal and all that stuff too. So you think General Mills was the only one that got cereal? Not General Mills ain't the only player. Pepsi got all that. Captain Crunch, all them junk in there. Couldn't make this stuff up.
Pepsi owns cereal.
Yes.
Seriously?
Yeah.
Man, I gotta look that up.
Oh, I'm about to get some options to this.
You gotta look it up. It's right here.
I come up in the late 70s and 80s. So guess what one of our favorite series to be? Y'all remember that old school? I'm finna test my age. I'm showing my age now. Y'all remember that old school commercial come out back in the early 80s? Probably me and Rich probably know this, and maybe you other. Give it to Mikey. He'll eat it. Mikey, give it to Mikey. He'll eat it.
Oh man, what is it? That's not Wheaties, is it? That's not Wheaties, is it?
Give it to Mikey. He'll eat it.
Life. That's that life joint.
Yeah.
Damn, I just showed my age.
Old school. Now, right? No, I don't bring it out. Now, how good the life cereal used to be back in the day. Boy, you eat the breakers on life cereal.
Yeah, life was.
Oh my God.
Still to date, they still them life cereal still move off the shelf today.
Life was nasty.
Wow.
Right, so y'all know y'all the new school. Y'all use all that fruit stuff. Back in my day, man, life cereal, bruh.
You had to put sugar on it, man.
Bruh, that's what I'm saying. Put sugar on that. Man, look at that. Some of that cake sugar on that.
You gotta put sugar
Put some
on
of that crack cocaine on them cereal, but that your sugar ain't them a crack cocaine 1 molecule away when you heat up, brother.
Yes, sir.
You on that bowl in the morning like that right here, like, boy, look at here, mama's cooking.
They crack cocaine.
Boy, you gonna be buzzing for about 2 hours out there. Boy,
You're gonna be hitting the walls.
All the sugar on that thing, bro.
Man, we have to put the sugar on it, man. You can do the same thing with cornflakes too. Cornflakes.
Yeah. Oh,
That's true.
I'm pretty sure how I really y'all remember Cereal 19?
Say it again.
Old school Kellogg, Cereal 19. Yeah, so y'all ain't ready.
Was that in the orange box?
Let me move on. It was like a maroon color box. Yeah, so y'all ain't ready for this work, but y'all ain't ready.
Man, we got the no frills, the fake cornflakes.
But y'all ain't ready for that work. Old school. Yeah. So look at it. If they got auto brand, go ahead, sister. You go ahead. Go ahead, sister. You muted. I can't hear you. Go ahead, sister.
You can't hear me?
Yeah, go ahead. Now I hear you.
When I went on ETF, first of all, I had it wrong. It's etfdb.com, and they have the 100 highest year-to-date ETF returns. And the top one is a company named Breakwave Dry Bulk Shipping, and they have an AUM of 90,000, but right just up under that, you have Bloomberg's crude oil, which is in $1 billion in the AUM. So how they get to be the top?
So again, assessing that, of course, you see it and I don't at this moment, but if you have to pull it up, so I'll do it just for the case study here. What's the website called again?
etfdb.com.
Oh, that's wrong. I missed it. ETFDV, DeltaVictor.com.
ETFDB, D as in dog, B as in baby.com.
DB, okay, DB. All right. Delta Bravo. All right. So you come over here, of course, you say, okay. So we're going to look for it's the ETF screener, ETF geography. You got popular ETFs.
It had the top. It was the top 100 year-to-date ETFs.
Top what now?
It was the top 100 year-to-date ETFs.
Top 100. So they got on the theme. See, AIT webcast.
On my phone, it looked like that.
ETF education tools, ETF screener, ETF. They got the spider in there too as well. Where'd you find that particular tab? I probably search through it, probably find it, but let's say active ETLs, future innovative. Where was that tab? By any chance?
The tab was 100 highest year-to-date YTD.
No, where's the tab where you find that? Where's the tab? The tab, like the macro tab. At the top.
Okay. It was under it, like on a phone. It was under it. It was like
so it was like it's already kind of pulled up. I got you. But if sometimes they may not be with the actual website, they just be subsidiary that be listing stuff on it too. So it might have there might have been something of that nature.
I think you're right.
Yeah, but it's all right. No, I'm good. But yeah, again, you can kind of go through and see because it has like the macro button, but they got an AI type of ETF blockchain, thematic type of investing ETF things, ESG, because y'all know we speak a lot about ESG, environmental social governance ETFs, marijuana ETFs. We know a lot of those types, whatever. So yeah, you can come through here and get a lot of firsthand information concerning around indices or ETFs, right? So really good place where you can come in here and get a lot of information, and they have an education tab. I saw that up there, right? ETF education, so that's very important, right? Because anytime you can get some education, they offer some insight. You gotta love that, right? Because it's kind of keeping you current with everything that's going on in the ETF space. And then all the the minutia, whatever that makes up that query, right? So really important there. So really good site here. You probably can get a lot of good information from. So thank you. And so we're gonna definitely bookmark this here, and we're gonna use it.
Oh,
that's what makes this stuff awesome, because you can always benefit from finding what pertinent tools that you can use to help give you what insight to be a better investor. Somebody said this is a broad paintbrush. When you think about investing, you're thinking about literally the entire world, not just your little local county, national snare. This is the entire world. Because the world just runs on two things. What are those two things? We talk about it all the time. The world runs on two things. What?
Time and money.
But definitely that. But on the business side, it's going to be either what?
Supply and demand.
No, I'm talking about the actual item aspect of it. It's going to be either be a what?
A profit or loss.
Products and services.
Oh, say again.
Products and services.
Product or service.
Product or service.
Two things that make the world go round. Period. End of discussion. Roll credits. Either going to be a product you're trying to acquiesce, or it's going to be a service you're trying to acquiesce. End of discussion.
Stop it.
Right. So that's your global commerce in a very layman term perspective. You can take that spider web and spin it however you want off those two diagrams at that point. Products and services. That's your world. That's your global commerce market. So this stuff gets very interesting because there's tons of stocks out there. There's tons of opportunity out there. It's endless. You'll be, literally going down the rabbit hole deeper and deeper for days. And it's great because all that is just knowledge. That's applied knowledge that when you can recollect it whenever you need, because why? I've seen it, I read it, it makes sense, it connects with this. Oh, I see what this is about. It's that kind of mindset. Make sense? So that's why when I tell people, when they're like, oh, man, I don't know if I got the time to study and all that. I got time. Are you kidding? You got a smartphone, right? You got all that information right at your fingertips. If you don't use it for those purposes, what is it going to be? A dumb, expensive phone, right? A brick. That's all it's going to be, just a brick, right? That's used for trivia stuff that ain't really giving you a payout for. It's not earning its weight that you paid for it in gold, right? So we put our stuff to work. Well, I be mash the hole in my screen, be trying to sell, buy, right? I put mine to work, but everything I got the technology and it's going to be put to work, right? So that's the energy you want to kind of keep that in mind, guys. Hold up, that thing I messed around and messed up on YouTube and timed somebody out. My mistake. Yeah. Forgive me, family. Ebnar, that was a mistake. That was playing with my phone. I don't know if I didn't reverse it. I can't do it from my cell phone, but yeah. So, but that's the energy, right? So just keep that in mind, right? So, learning is vast, but it's also precise when you know what to look for, where to go and how to, pretty much unpack those, break down that information with that. Make sense?
Yes.
So always some good information that comes out of these bills, because that's what it's all about. It's about, again, meeting people where they are and just figuring out how can you improve on one's ability to, again, interpret the data, make it all make sense. You take it from raw form, from a fundamental story, and you apply it to a technical form story, right? It's all relevant, right? So we're talking about, Mondelez and all this stuff like that. And right now, what's kicking everybody behind? Inflation, right? So these products that we love, we pay a little extra for them, or if we pay the same, we get less for it, right? That's what inflation does to you, right? So a lot of these stocks like this, let's say, look at Mondelez right here. Look what it's been doing over time frames. Kind of been, it kind of, was doing really well, peaked out because of COVID. And then, since then, they kind of pulling back a little bit, right? Inflation is starting to kick in a little bit, right? And again, those things happen, right? But it's still significantly, looking where it came from, doing very well, right? Kind of what, sine waving its way through, making higher highs, right? In this case, higher lows that we looked at for our support. So there's always a good, a good story out there if it has longevity and what they say, consistency in terms of their product value and what they offer. Yeah, you can find yourself just parking a little money here and there. Like our brother Andre, right? Y'all know brother Andre Boyd, right? Of course, y'all know he loves General Mills. General Mills has a really good dividend. That's the other company that make the cereals and all that stuff, right? They make a lot of different cereals at General Mills, right? It pays pretty good dividend. It did really well under COVID, because how many people were using their product during COVID? A lot of people. Obviously, look what the stock did. Came way down here, right? Around about $20 and ran all the way up to about $62. That's roughly around about what? 300%.
General Motors, General Mills.
Oh, I did General Motors, my bad. And that General Motors did good too. I forgot. Yeah, General Mills is GS, my bad.
GIS.
My bad. Yeah. There you go. No, that's
Hold up.
General Mills.
GIS.
It's GIS. I'm like, hold on, I know it's GIS and GS. I said, well, I know these stars been doing stuff so long. Don't mind get all to it. But kind of use that in the same breath. Right during the thick of COVID, what did it do? Right? It pulled back like everything did because of COVID. Came down and hit like what? $44. And from there, it ran all the way to like $63. Right? COVID, right? Those products we talk about, cereal, all that stuff, consumer staples, it's part of that ETF. So it's little stuff like that. You're like, man, that's actually a pretty good return. Why? That's rough around about what? 30%, somewhere around there. Nice little bump up from the bottom to up to the top. Okay, what's 30% of 10,000? $3,000. What's 30% of 100,000? That's 30,000. What's 30% of $1 million? That's 300,000. See how that work? The more money you have able to contribute to that investment that gives you a good opportunity, the bigger your payout will be. That's why people that got money, they set for life. If they ever learn how to invest thoroughly, they'll never have to need a day in their life ever again going forward. That's what we're all trying to get everybody up to that speed of that lane. Because this is a revolving door of what? Income generated, right? And you don't have to really do nothing but just monitor and move on about your day and your life.
Yeah, I'm going right now.
Let the money keep working for you. Make sense? So that's why this stuff is important. That's why it's good to learn everything you can about it and learn how to put it to practice, right? Take this stuff to take it to trial, right? It's a take it to trial, back test it, right? Let these companies prove themselves to you, not you to them, but them to you. They have to earn your money. They have to earn your investment. They have to earn it. Let me see a good track record. Let me see your books, right? Let me see your growth. Let me hear about your R&D, your M&A perspective, right? All that stuff is very important, right? It's very important. All right. So a lot we discuss as always. Again, really good. Again, we're trying to make it make sense. Right? Markets are not that complicated. Once you realize how to just sit still for a second and say, let me connect the dots here, right? Let me make all this stuff, right? After that, it's like running water. I got a mic. After that, it's like running water. So put in the work now. You're going to benefit from a lot later. This again, the rabbit hole goes very deep. How many companies are publicly traded? Thousands of them. Thousands. Right? And you still got other exchanges. You got Hong Kong, TSX in Canada. You got Israel. I mean, the Garnet. They even got exchanges over there in Africa. You want to move to Africa, get away from America? You can go over there and trade the gun on the stock market. South Africa, they got stock market down. See? And you turn around and still trade the American markets while you're over there too. How that work? Gotta love it, right? You gotta love this stuff. You have constant access to being able to make money. Constant access. Right? So when you think about people to be like, when you see all these little kids, like they take a sabbatical, like I'm gonna go backpacking across Europe or backpacking all through Kilimanjaro in Africa. A lot of times these people are, they already got money, family got money. A lot of these people make their money in real time because they trade in the forex market. They making money as they go, funding their little sabbaticals or whatever, right? Backpacking excursions. How do people funding themselves, making money? They do. They have money saved up now. A lot of people, if they know how to, hustle, they got the biggest right there in the stock market. Right, so y'all get it. All right, so a lot of interesting stuff that you can pull from that. I hope this stuff was edifying. Like as always, we're trying to bring substance, right? Understand the market risk profile. What to look for, what to kind of be privy to, right? Engage the markets in a way where you're not. Look, if it's easy, then you're not going to really respect it. What makes this not really, it ain't hard. It's just that you got to put in the work. Right? Like we talk about 10,000 chart hours, right? scenarios where you have to put in the work. This is good though, because this helps improve your what? Your cognitive function to be able to deal with the market, right? In a lot of different perspectives, right? All this stuff is what they call information well received. Excuse me, information well received. Well received. Because it's useful. It's what they call actionable intel. Actionable intel. Right? So don't run from it, run to it. Right? Run to it. There's a benefit to it, and there's a bag waiting for you too. Right? So that's why this stuff is important. Use your team, use your family, use the information thoroughly, and let's continuously climb this mountain of opportunity. So tomorrow we got a little bit of economic data coming out. What do we got tomorrow? We got let me see, what do we got tomorrow? Is there anything? Because next week is the big week, right? Next week is the big week. We have what? I don't know if anybody knows. What do we have next week called economic calendar information?
That interest rate decision from the Feds next week.
Man, do you have to know what date is on?
I think the 22nd, Tuesday, or it's either Tuesday or Wednesday.
Right, so Tuesday, and it's called what? What is that meeting called? They have this thing pretty much, every month. It's one of those monthly meetings called the
FOMO.
MC, closing up, right?
MC.
Getting the A, bro, because you on it, right? Which stands for what? Federal Open Market Committee. All the Fed governors come together, they compile data, give it to Jerome Powell, he go out there and pretty much give the breakdown of where we at in terms of, in economy in that perspective. This was important because of what? What's the reason why this was important? Why this was important?
We're dealing with inflation right now and the interest rates and how the Feds is buying all these bonds. And I guess the Senate and all of the big guns is worried about tapering, but Jerome Powell don't seem to be slowing down on it.
But we need to what?
He need to stop doing it.
Because what's running rampant?
Markets, inflation.
Inflation. Well, definitely market, but definitely inflation. And inflation, if they don't put a handle on inflation now, it can turn to what kind of inflation? It can become what kind of inflation?
Stagflation.
Stagflation.
It's the worst inflation any economy can have.
But if he stop printing, and and the interest rates go up, that's problematic as well.
Well, you would agree because they kind of held off too long, right? That's kind of like you ride tires to ride to the wheels fall off. Well, by the time you ride to the wheels fall off, you'd have messed up the axle, the A-frame, the struts, the boots, and all that stuff, right? Right? That's essentially what happened, but eventually it balances itself out. Why? Because it puts everybody in what? In saving mode. Not just borrowing cheap money, defaulting on debt, all that stuff halts all that. So, but that's the trade-off when you wait too long, those are repercussions that can come from it. So there's no soft landing with this process. Either way you look at it, there's no soft landing, right? But it needs to happen because if not, you're gonna continue to pay higher and higher and higher prices at the grocery store and at the gas pump. The two main ubiquitous items that you cannot live without. Stock market can do away with having all-time highs all the time, but people can't, miss meals. They got families, they got kids. They cannot. They can't afford groceries and this, that, third. The government ain't gonna, look.
Somebody gonna get robbed tonight.
Makes sense. You got to put the ski mask on, lace them up, right? Right? It's weird how they have all this money to throw away. Like we talked about with Vegas, they throw all their food at night. Well, Congress does the same thing, throwing in high-dollar trash items and to rich people, basically pandering to rich people, while Main Street is stuck holding the bag. So make this stuff up. But yeah, you better get you some skill sets that can put you in the driver's seat where you don't have to depend on what? Government or another entity to provide you with opportunity in life. Let that marinate for a moment. If you depended on those things, you're in trouble. You're in trouble. So that's why we're trying to teach people to have that independent nature about what? Trying to find yield or opportunity in their own right. Right? You guys can do this stuff. Don't convince me that you can't. If you get serious, you can do this. Because this is average, everyday stuff. Really, it's not. You can do this stuff. Right? So I just want to make sure I put that out there so we all know we're on the same sheet of music. This is why we go hard. That's why we should study. That's why we should be excited to want to study, because it's only going to benefit you, because the more knowledge you can acquire within this, at some point it's going to be useful. I guarantee you. At some point it's going to come back around full circle and you're going to use that information. And you're like, I'm happy I read that. Or I'm happy I looked at that article. Why, learned about this space or this sector or this industry, whatever. It has relevancy. It does. It really does. Right? So I just want to make sure we put that out there before we get out of here this evening, that trust me, this is time well spent. It's time well spent. Right? To make money on your own time, underneath your own dime, what's more revolutionary than that? So I'd probably be getting an inheritance, right? But outside of that, look, that's revolution. Right? That's what revolution looks like and feels like when you're in a position where you make your own money underneath, their system. Right? So that's it. So let me get ready to get out of here, guys. A little bit early tonight for a good chance, because we started a little early, right? I could probably somewhat eat at a somewhat decent hour, even though it's way beyond dinner time at 6 p.m., right? But whatever, right? So before we get out of here, any other questions on myself before we get out of here? Anything? Anybody?
We can get the recording for this event. I missed the beginning.
Yeah, YouTube. So we're doing the YouTube landing place because it's easy to access it, and then, of course, it's unlimited, for space value over there, where I don't have to worry about, doing all this kind of porting stuff over and whatever, and trying to, zip it. So just go to my YouTube channel. You guys pretty much should know at this point. Get to my YouTube channel, and you'll be able to watch it on playback.
Okay.
And so again, we kind of assess based on what we feel like tomorrow's market may be. As of now, it's playing into that thesis of a potential pullback. But again, y'all know this doesn't work. The market's still subject to other nations and other markets. And right now, of course, let's see, as of now, the German DAX and the FTSE are slightly down until, European market obviously open up the London session opened up at 2 a.m. The Nikkei, which is Japanese market, they're slightly down. The topics in the Hang Seng, the Chinese market, they're down. So China's down tonight as they kind of get cracking on in their market, down about 124 points. So that should drag our markets down because, those two biggest markets on the planet. We know the Korean market is in trouble, right? The Korean market is in trouble because of one hedge fund house. It's been all over the news lately. I'm going to test y'all on the way out the door. What is that one hedge fund house right now that got a lot of markets scared right now? America and European markets are scared behind this one little company that's been all over the news lately, and it's in the Korean marketplace. What is the name of that company? Starts with an E. I cheat. Been all over the news lately. What it's called?
You said what?
What is the one company that's got the whole entire market scared right now? If they fold, it's gonna mess up a lot of people's books. BlackRock, JP Morgan, everybody. So the European markets and American markets are scared if this one little Korean company folds. Or a little, fund manager closed. What is that name of that fund manager?
Starts with an E.
Starts with an E. Been all over the news lately. If you've been watching a lot of these financial news channels or just reading the news, starts with an E. It has a lot of significance too. And that's why they're scared. They hoping that the Chinese government bail them out. With the Korean market, I think, the Korean government, whatever, bail them out. Starts with an E. This is the homework, because if you don't know, you can go look it up.
Yeah, I don't know. I'm gonna have to look that up.
Starts with an E. Second letter is E. The V starts with the second letter is V. Next letter is the E. I'm playing charade over here. Next letter is R. Next word G. Letter is G. Y'all might want to go Google this one right as soon as you can. A lot of people scared right now because of this company right here, Evergrande. BlackRock scared, JP Morgan scared, Goldman Sachs scared. A lot of those little, they scared.
Oh, what's going on with them?
Wait.
Do a little research. R&R on that right there. Y'all remember a while back that one investment house that went under that rocked their market because it was a private entity that was owning billions of dollars worth of holdings underneath them, and they folded because of it was like some what was it called in the fold? It was all over the news, right? About that one guy that was investing a lot of these rich people money, and that fund folded. What was the name of that company? God, dog, it had a lot of other companies tied to it. Why? Because their holdings were attached to a lot of different a lot of different stocks that had, that they had major weight in. So if it goes under, that means all those funds or those holdings get dissolved, which brings those stocks down, meaning that money gets pulled out of those stocks and it brings them It brings them down. This company right here got the same issue right now. It's a lot of big tech weightings in their portfolio, all that. If they get liquidated in one move, that means all that money just pulls out of those sectors or those stocks, which obviously consequently will drop some of them stocks.
You said EVE?
Evergrande. Right?
Oh, no, I never heard of them.
Yeah, so it's been all over the news lately. These do what they call stats for nerds, right? Y'all know how we roll over here.
Oh, you know what? Oh, no. Yes, you're right. Yes, I just seen it. I just seen it today. Yeah, okay. Man, I didn't think of that. That was a good one. Yeah, that's a good one.
First thing you see right
here. Yeah, that's them right there.
Dude just came out tonight.
Twitter. Yeah, okay.
China's in battle. Developer Evergrande is on the brink of default. Here's why it matters. China's nightmare Evergrande scenario is uncontrolled crash. Yeah. China faces potential Lehman moment. Lehman Brothers. They at the level of Lehman Brothers.
Oh my God. Yeah, that's dangerous.
Wall Street seems to be unfazed. That's just because they're trying to They're trying to keep people in the market. They scared. Don't let them people fool you with these dumb articles. They scared. They don't want that thing to go under.
Right. I just read that Singapore government is putting $1 billion into the stock market, in their stock market.
They hoping China bail them out. I was saying Korea, but I was right, China earlier. They hoping Chinese government bail them out.
Yeah.
Look, even got YouTube video. What's behind the collapse of Chinese property development? Evergrande, see right, property, see. Chinese property giant. They're kind of like Simon Property Group. So yeah, it's a lot of stuff out there. And a lot of people like Goldman Sachs, those type of people invest in those type of little funds like that too. So that's why they're scared. So yeah, just kind of keep your eye on it. Not that you have to, but all this stuff is relevant.
Okay, yeah. That was a good one over here. He got me with that one. I'm like, okay, what is he talking about?
So you getting it? You know how to hunt. Learn how to hunt. All you got to learn how to hunt. This stuff is great. That's why I love it, because all the information has relevancy, right? All has relevancy. What makes it all fun.
If I look on Stash, I think Evergrande is in the CXSE. That's an ETF that has 10% limited, and that's called Wisdom Tree China, and BBAX, and also XSOE. These I think they all have Evergrande in there. XSOE was Wisdom Tree. So Wisdom Tree China, Emerging Markets, and Wisdom Tree China, State-Owned Enterprises Fund. They might be in trouble. And then JP Morgan, Beta Builders, Developed Asia.
Facts. What it says right here, the Evergrande Group of Evergrande Real Estate Group is China's what? Second largest property developer by sales. Second largest. Second largest, not 50th or not 100th, not 30th, but second. Making it the 122nd largest group in the world by
That's convenient timing for U.S. as far as the U.S.-China relations.
That's why Joe Biden and You know, President G been having these little, you know, back and forth discussion. Remember, a guy got Ether today. Matter of fact, a general got Ether today because they're trying to have conversations with Chinese right now. They see that's why I say all this stuff has relevancy. All it's like, well, it all has relevancy.
Cold War.
All day, every day. So I always tell people, convince me how this information is important. You know, not the way it really affects our lives now, but from a market perspective, we need to know because we need to make sure we plan. And just in case we need to make, you know, right? It's good to know. That's it, guys. So I'm going to shut it down. Unless there's anything else for me, I'm going to go get me some meat. My stomach touching about me eating little apples. These junkies make me hungry.
Thank you so much, Over.
Thank you all.
Thank you,
Yeah,
Over.
thank you, Over.
I just wanted to say thank you. I'm getting dinner too.
Y'all know I'm humble. This is teamwork. I'm Bantu for a reason. I am because we are. We're going to get this information. We're going to get this work. We're going to put it to work. Right?
I love that.
This money. And ain't nobody going to deny us from it. They can't stop us. We getting our foot in the door. And the more we... Go ahead. I'm sorry.
No, I'm sorry. I was talking to my boys. Yeah. Oh, I'm sorry. Let me take myself off.
No, you could. Long as we continue to grow in this, look, there is no sky, meaning there is no limit. So that's why, like I said before, all this stuff is relevant, right? You get to learn your entire world, what really makes the world move from the palm of your cell phone, laptop, computer. And you being privy to this information, which is public information, but it has a lot of gravity behind it. Why? Because there's a paper trail attached to it that you can benefit from. No more claiming something or a company or a team and ain't really getting nothing from it. That's my team. Let me see your P&L. You got P&L? Oh, you just claim it like, you know, fictitious. You still in that? Okay, all right. Like it. Shots fired, right? If I'm claiming it like that, if I'm gonna speak it like that, I'm gonna own it. Like I trade it or I got part of it. Right, so we're trying to build that mindset up so we can get serious about getting paper, not just, you know, watching everybody else make paper and just kind of, you know, rooting for everybody except our financial situation. Them days over with, man. Look, we already late in the game too. We got to go, right? We got to get what we need, strategize properly, and, you know, get that yield that we know we deserve, right? We have to. Kids gonna love you. Trust me, the kids gonna love it. Right? When mom and dad leave them a nice little bag, insurance, stocks, all that stuff, CDs, bonds, trust. Yep, see, mom and dad will grind it, right? And they gonna know how to manage it. Why? Because you schooling them along the way. Facts. That way they can come out, they're gonna have something to fight with. They're gonna be fighting with, you know, debt and, you know, waiting for, you know, the government, you know, to help them out. Days over with. Days over. Get it. So I'm in. So that's it, guys. So I'm, you know, somebody say something.
No, I was gonna say my custodial account's doing better than my other accounts in Stash. It's like, oh my god, I want to switch.
Getting them right though. That's what I love about them custodial accounts, right? Get them kids, the kid get a chance to get them involved too. Look, man, shucks, this stuff was fun. Yeah, this is what they call real life monopoly with your kid. Like, look at this stock, this company. You like Oreo cookies? You like mom always had to buy you little Oreo cookies? Guess what we're gonna do? We're gonna invest in the company that make Oreo cookies. Who we gonna invest in? What's the name of the company? It's called the company that manages them. It's called Mondelez. Yeah. So when you get, you know, we're gonna buy you stocks of Mondelez. See.
It's that we're being more careful. I'll be more careful with what I'm putting the money in his custodial account than I am.
Do those custodial accounts on Stash, do they get to participate in the Stash party?
It goes into the personal account. I think it definitely goes into the personal account. I think you can.
Custodial accounts, no, they don't get to participate because it's under their parents' account.
Okay.
They don't have like
custodial
login.
We're gonna talk on that. We talked about it before, but you know, you had different at the kind of still beginning stage, but we're gonna give you that information too.
Thank you, because y'all know I have like 10 children.
That's all right. See, that's why you need to be linking with those sisters, because you hear the sisters talk about it.
That's
right.
So
you got a direct link to our sister Angie, and she can help you. See how that you gotta use
Thank you.
Yeah.
Use your tribe, guys. You gotta use your tribe. Keep telling y'all that, man. They keep telling y'all use tribe. You gotta get on code. At some point, black people gotta get on code. Stop trying to
Yeah.
build a mountain, Empire State Building by yourself. No, get some help.
The one I knew was Ameritrade. You can have as many accounts as you want, and a community bank that I just got with, they allow custodial accounts and trade with the custodial accounts.
That's perfect for it too. That's really
Community bank.
Come on, come over. We turn it back around.
Yeah.
Use your tribe, guys. We'll get you
Don't mean to hold you too long, but why is Biden trying to get access into these accounts, into Chase, into the banks?
Mommy, can we have this?
What's that?
Put that back. Mommy, can we have this?
We got more to talk about later.
Put that back.
I'm gonna look that up.
Can we have this? Mom.
I missed it. I'm sorry. I missed the question. I'm sorry. I'm trying to.
No, I was saying why Biden is trying to get into these accounts to see. He's trying to get access to see what people have in their accounts, in their bank accounts.
He's trying to get into the accounts. What you mean?
Yeah, I guess with all the cryptocurrency stuff, they want to find out what people have in their bank accounts.
Oh, you talking about the Rich Gensler, SEC chair?
They already know what's in your accounts. They ain't got that.
Right. Should be.
Right.
I don't know.
It's all right. No, that's just you know what that's about. It's like any other scenario where when we got. That's another conversation for a long time. I don't want to go in, but
definite. We
got blatant fraud, number one, with the feds, right? We got blatant insider trading with the feds, Kaplan and Rosenberg.
Mm-hmm.
They watched the entire market be treated like a casino because of COVID, because the feds just said they're going to pump all the free money into the market. People who realized what was happening, they just dumped everything they had into these so-called defensive stock. So it was an easy way to make a lot of money, because this is the moment to capitalize on taxpayers' money. They have no clue about what's going on. And so it was a cash grab. It was the biggest monetary heist ever in American history, period. So basically what ended up happening is the small people or the little people or the retail trader figured out how they can come up too, which is odd because Wall Street not used to us making money like that, right? Income to gain stocks, income to Wall Street bets, AMC, et cetera, right? So because that was able to happen in a lot of these small time players, and that's before we even think about the crypto side, because crypto was already killing it, right? The ICO turned a lot of average everyday McDonald's fry workers into millionaires. Government's not ready for all these new people becoming the millionaire kind of status, and they ain't really put in no hard work in terms of what they consider how you should slave to make money. That messed up the whole game plan in terms of keeping everybody in check. If everybody figured out how to make their own money, do you think there's a need for government or a dependency of government? They're afraid of that. So they always gonna try to have ways to implement more constructive big government policies to kind of back the little guy off of that kind of fluidity of opportunity. So it's always the biggest hustle. Government has transformed now to an oligarchy. It really used to be about they had to earn their weight to go to be considered a politician. Now we know everything about in the politician side is a celebrity congeniality contest. These people are straight frauds at the highest level. Charlatans, you name it. Throw in your favorite adjective or noun. They trash. So every now and then they want to do the so-called shakedown. What is a shakedown? Let's prior to their books. Let's add some more regulation. Let's make it a little bit more complicated for them if we can. It's a shakedown. Nothing new that America hasn't been doing since its inception to a lot of ways, but a lot of it has been backed by how big of a pushback they got from the people. If the people get tired of it, government has no power. But since people are distracted with a lot of other stuff, sometimes they go along and get along, policy get implemented, it gets put in the legislation, next thing you know it's a law. Where did this come from? That's when you end up hearing that, where this law came from, where this came? Yeah, they did it right underneath your noses. The same way that Obama enacted the Patriot Act. So you can literally have free will to spy on you through your webcam, cell phone, laptop, computer. And nothing you can do about it now. You slip that in underneath everybody's nose. Don't make this stuff up. So that's just their position and them trying to gain more of your privacy or your sovereignty away from you. Your autonomous value to live life on your term, they're trying to take more away from you every day. Why? Because they need your fealty. They need your loyalty. Right? Because if there's less worker bees, who they got to control? Who's going to make up the back end for them to get paid? They make their money off taxpayers' money. They don't make their own money from performance-based industries. They do not. They make it off you. So they need you to be complicit. So when you hear them speak about stuff like that, that's just them trying to shake up, the minds of people. Look, we are in the greatest money printing industry ever. When I say that, meaning we're using their system against them. This is where all the money is at. This is where the world riches are stored in what? Equity markets. Period. In the discussion. Roll credit. There is nothing else out there more powerful than the markets, global markets. Period. The fact that y'all in it, that means y'all what? Y'all become now power brokers. You learn how to really use to your benefit, you never have to worry about working a day of your life ever again. And you always have constant access to what? Capital. Through a day trade, a swing trader, monthly, 3-month quarter-based trader, dividend-based trader, a leap call, a leap put. See, it's endless. Forex, crypto, it's endless. Now that a lot of the young people are now becoming, inquisitive about this stuff. The old people that have been sitting around robbing people for longest and stealing, they nervous. These boomers, they nervous. They can't deal with high frequency scenario because the algo bots are messed up because a fundamental story is not necessarily what's going to drive the stock. It's all about the momentum now. These old heads can't plan for that. They ain't used to that. They used to just knowing how to use the cheat code to make all this money. So yeah, thanks to Wall Street bets, they shook up the game. Right? Thanks to the ICO and crypto traders who going off grid saying, no, I'm gonna do it my way. That's why we like crypto. We ain't buying gold. No, we're gonna buy crypto. Shook up the game. So you got to be happy. This is a great time to be who we are in this space at this moment. Why? Because everything's becoming more what? Accessible. Cell phone applications and trading app. Y'all get in there firsthand. Y'all are part of the evolutionary swing now that's going to catapult us into the next 10 years. Guys, it's just 2021. It's just 2021. They got a mandate to have what? Basically the entire globe, basically, they ain't in the EV vehicle by what? 2035? That means you got a 14-year head start to plan for such a great opportunity and investment value. Just using that thesis alone. Before we get into AI and all the other stuff. See how that? Y'all with me?
Thank you.
Make sense?
Yep.
Everybody, y'all with me?
Yep.
This stuff ain't rocket science.
Sir.
So this why I keep saying, use this stuff to your benefit. Don't look as if it's not important. Dig into it. You've learned a lot about the system as a whole anyway. That's a good thing. You need to know how they cooking and booking and crooking. You should care. Because now you know how to operate in and around it, right? So there ain't nothing wrong with that. Because again, we get a chance to make our own money. You gotta love that. It could be 5,000, whatever, 10 grand. Well, it could be, look, you gotta love that. You gotta love that. That's power. Again, knowledge brings power. Power equals profit. Right? They can't take that from you. They cannot take that from you. And so just stay focused on that. So of course that's stuff important because now they got the corporate tax out there. They're trying to get this money. They're mad because they can't get that little dusty little infrastructure bill pushed through. Of course, they have some benefit that we like because investors, because of the EV side, clean energy. But that's the game that they playing in Washington. That's what they do. Right? It's about what? Quid pro quo. They want something for something. They don't let it just go through easy. And right now, Senator Joe Manchin, he's the one holding up the whole process. So they're trying to what? Finagle him and woo him and court him and whatever. But until then, they're gonna say, well, we'll just come at the Wall Street a little bit. That's just spook Wall Street, scare them a little bit, right? Hit them with a higher corporate tax, all that kind of stuff, and capital gain tax, and all this. They've been sitting here gonna try to go after wealthy, but nonetheless, it don't stop the show. So we let them play their little reindeer games. We just gonna keep figuring out how we can get us a bag, right? Right. But they cannot stop that. At least they can't stop us from having access. They're just fighting their little boomer, cousins and friends that they're just robbing, robbing Main Street anyway. So it ain't like, they just infighting. Who wants to rob who, right? That's what they do at that level. It's sad, but that's what they do. These people, Again, fraud at the highest level. And I'm saying that because they just know there's a big disconnect from people who really need as opposed to those who have. And the people who have that got more than they need, excess, they're just greedy at this point. And they still got their foot on the gas pedal. These people have no chill. Why? Because they built like that. They come from not having. Now that they stealing and robbed and raped and pillaged and all that to get it, now they got to try to maintain it by any means necessary. Even at the expense of other people and bad health and bad education and bad this, bad that. They don't care. Any people care. It's all games. All they laugh people. They be talking about, oh, that's my side. You know, people like play these little political game. I'm like, man, look, okay. How old are you? Are you serious? Are you still drinking Kool-Aid like that? You just put all your filter into that. But anyway, y'all get it. So I'm gonna get out of here. So I hope that hope that was a little helpful, Sister Angie. But that's nothing to worry about. Just stay the course of what we've been doing. You know how this stuff works. For us to just gas foot on the pedal, let's get this knowledge, let's get this money, right? And so we can have the confidence we need to go forward. It's all relevant. Right? That's it, guys. So if there's anything else in myself, I'm gonna get on out of here. Get a little bite to eat. Go ahead, Over.
I said, all right, Over, have a good one.
No, thank you, Over. Thank you. So again, I look forward to our next session. Again, it'll be on YouTube. You can go back and pull it back up. Of course, like I say, use your group, use your village. We're Bantu for a reason. I am because we are. Don't be afraid to ask the question, right? But make sure there are questions that can be, effective and you get something from it that you can probably could look up yourself. If that's the case, need some help, still, we're here for you. Let's use each other thoroughly as we should anyway. We're all building something that's gonna be great that we can pass on again to these younger folk out there. We can actually get them some of tangible benefit, not just a whole lot of, whatever, right?
Okay.
That's it. Love it. So anything else, guys, on the way out? Everybody good?
Yep.
That's solid.
That was great.
Thank you.
Thank you.
Yeah,
all.
well, I got everybody on. What's everybody's thoughts for tomorrow? What y'all think the whole market gonna do as a whole?
Now, you know what I'm about to say, right? You know what I'm about to do first, right? Over, you ask that question, right? You always do what? Throw it right back. What do you think gonna happen tomorrow?
Yeah.
I think we're gonna have a good sell-off tomorrow. Hey, we open the front door?
I hope CEI is not selling off because I'm holding on to I'm trying to hold. Everything looks so nice.
Tomorrow. But guess what? Like we said before, right? I know we're getting ready to get out of here, but again, no need to kind of put yourself in a position where you feel like you kind of nervous about reality, right? Because we've already mapped out our risk versus what?
Look at that.
That means we have no stress going into tomorrow. Everybody else gonna be stressing, not us. Right? Unless we over leverage it, not unless we over leverage the position that we got from the previous swing. But outside of that, we're not stressed. We already did our work, our due diligence.
How long you think it's gonna be before the SPY starts going back up to the number?
Again, that's a question that we only can know by what? The price action that dictated how it presents itself to give us any inclination of what is breaking out above any kind of natural what.
Yeah, my very.
Just post it today. You post today. It has to break out above a certain what?
448.
That video that you posted today, Sister Eva, and you know I'm gonna hold your feet to the fire because you learn it. You posting information, you gotta own it. If you watched it, you have to break out above the what?
The peak.
Where's the peak on this chart you see right here?
You don't have time for that now.
Part of our game. Again, y'all know I'm gonna keep pushing that. We're gonna get, let's stay.
Look at it. Oh yeah.
You see it right here. Where's the peak?
Okay, wait. God, it's on the phone screen. What is it? 449.
You got your pen? Oh, my bad. I put it down. Yeah.
449, 440.
Oh, let me get this mess out. I got you.
440. Wait. It looks like 449, but 448 and a half. Okay. All right. Thank you. Yes, of course.
So that's why I say all these diagrams up here for a reason. Y'all know we're gonna put you to work because it's a part of you feeling confident about what you can account for. Everything that goes outside of what you can account for, you kind of like what? You kind of all joy, especially if you have your money in it. But if you do, at least you feel confident in why that money's there. Does that make sense? Because you've mapped out your what? Your risk profile, right? This is about risk management. Make sense?
Yeah.
You find that resistance, that means you got a back door. Be it short term, whatever, but at that moment, you still got a back door. You find that support, that means you got a floor underneath your feet. If it just momentarily doesn't matter at that moment, at least you know you got a floor underneath your feet. Does it make sense?
Yeah.
From there, you can make good decisions because guess what? Your high is here. Here's your bounce. Here's your gap closure. What else to talk about? Either we break that, go lower, make a new low, or we try to trend or meander in around this channel. If we can't break out of that, then we start looking at all these levels here now. Free will to kind of snap back some of that back. If not, we get ready for the what? The true correction, right? Right? And that's gonna be happy time, right? So y'all know we're gonna be sitting there, Birdman hand rubs. Let's eat. We're gonna eat. Everybody gonna be walking around with fur coats on in the summer.
That's a real baller.
With a white beat on there, sweating. Boy, look, I got that. Okay, I got to do my thing. Done one style. We're get paid just because we can. So, gotta get excited for that. Gotta get excited for that. So yeah, learn, plot those supports, plot those resistance, plot those what peaks, plot those troughs. Keep the trough. Check out that video that sister posted in the group too. That's a good video. That's a good video on peak to trough. Matter of fact, I'll get it posted on the YouTube side for everybody on the YouTube side.
Yeah, the one Sister Angie put in there earlier.
Yep.
Yeah.
Yeah, I gotta finish watching that. I started it, didn't
Good
finish
breakdown
it.
of peak to trough. Seriously.
Yeah, I started watching it too. I'm about 30 minutes into it. Excellent video.
Shaniqua was asking about that reverse head and
Big time
shoulders.
profit, y'all.
Yeah, Shaniqua, that was the reverse head and shoulders. We can see it right there. The inverse head and shoulders.
A lot of good things you can take out of it. You see what's going on here. Once you see it, you know, you got a shoulder there, you got a shoulder there, you got a head here. See it trying to happen. It's trying. They gonna try.
Can somebody reshare the video?
It's on YouTube. Go to my YouTube channel.
Oh, okay. I thought it was a video that someone shared to look at.
Oh, that one. Yeah, I'm gonna put that one on YouTube too. I'm gonna put it actually in the comment section. But,
Okay,
but it's in the group. You in the group, Sister Shaniqua, ain't you? You in the group? Yeah. I'm tripping. Y'all gonna stop playing with me.
I better stop playing.
Y'all be finding all the other groups. This not coming on y'all playing. Y'all be
Inverse
finding
head and
all the
shoulders
other
look
groups.
like a W with the
I'm
the
subscribed to
big
African.
middle.
Navigate them places, but when it comes to investment stuff, just like, but I can't find that stuff. It ain't hidden from it.
No way. I'm subscribed
Not
to
a
African
W.
Emporium. I'm
That's
subscribed.
not a W.
No, that's my YouTube, but it's also inside the Facebook Messenger group. Cause that's where we post a lot of that stuff sometimes too. But if not, I'm gonna post it in the the comment section, or I'll post it maybe in the description box. Either way, you'll have access there because Sister Angie, that is a really good video that she posted about peak to trough. You know, because we speak about that a lot, but you'll have it. Trust me, no worries. I got you. No worries.
Thank you.
We're gonna get our detective on, and we're gonna be what? We're gonna be top notch. We're gonna be what Craig and Day. You ain't no cop, Day. We top flight security, flashlight, tails, and German Shepherd, baby. Let's go. Right? Let's go. Right? So don't run from the information. Run to it. Run to it, guys. Run to it. Trust me, it's gonna benefit you. Right?
We gotta get ice.
That's it, guys. So I'm gonna get out of here. I'll see y'all beautiful people.
Peace, power, and profit, family.
Peace,
Good night, King. Wait. No, get on the side of me. Get on the other side of me.
Stay healthy, and we'll see you guys on the next one.
Peace and heart space.
Peace, everybody.
Peace, everybody. Peace, everybody on the YouTube side as well. Thank y'all for tuning in as well. Thank y'all, family.
Stay right here.
Everybody. Peace, everybody. Peace.